Hello and welcome students to the Pulse video lecture series. Myself Amit Mangtani, author of Pulse Handwritten Notes and the faculty of Indian Economy. So guys, we are continuing with our economy lecture series which is completely aligned with the Pulse Handwritten Notes. And today we'll be discussing a very important topic, that is public finance. Now let me tell you guys, from here itself you can expect a 1 to 2 question in the prelims examination. But the question which you are going to see from this topic is going to be mostly conceptual or analytical. Conceptual or analytical. So thereby I need your full attention and concentration to understand the concepts in this particular chapter. So just as our usual exercise, let me just highlight the topics which we are going to cover in this particular lecture. Clear? These are the topics which we are going to cover. Now let me start the particular chapter with the idea of government. Guys, haven't we discussed already that, that there are 4 sectors of macroeconomics? Yes or no? There are 4 sectors of macroeconomics. And in those 4 sectors, the one sector which we have seen already, that was government. Clear? Not only this, we have also seen the role of the government. That government play a very important role in boosting aggregate demand. Yes or no? The government play a very important role in boosting aggregate demand. How can I say that? Guys, please recall the expenditure method of measuring, of estimating aggregate demand. So you will find out that through the expenditure method, the aggregate demand can be estimated like C plus I plus G plus NX. So government expenditure directly results into boosting of aggregate demand. Clear? So thereby we know that government plays a very important role in an economy. And let me tell you, we have also discussed that this role of government have been continuously evolved. From the second half of the 18th century, when the idea of capitalism was there, the role of the government was very little, or government was not intervening in an economy. Yes or no? So at that point of time, the government had to play a very little role, and the state that emerged, that was laissez-faire state. We have already discussed. But then after the Great Depression, we have seen the role of government expanded. The role of the government expanded, and it kind of brought almost all the functions under the sun by government itself, under the roof of government. Government have been engaged in providing public goods, private goods, doing business services. Most of the things are done by the government after the Great Depression of 1929. Clear? We have seen that. The kind of state we have seen that emerged after 1929 was of a welfare state. But then 1990s, we have realized that okay, it's not only government or only private sector that has to work. They have to both complement each other. They both have to complement, support each other for the welfare of the people. Clear? So that is why you guys see a mixed economy model which has been adopted by the countries across the world. So there is no doubt at all in the present time that okay, government do not have to play an active role. There is no doubt at all. So if I ask you, or suppose if you think, try to recall that okay, what functions the government does? What are the activities surrounding that the government does? Does it provide you some goods, public goods, merit goods like public schools? Yes or no? Does it provide that? Or does it provide certain subsidies to the people, undertake welfare schemes for the people? Or does it ensure the boosting of economic growth? Or does it ensure the maintenance of price stability? That is decreasing the price stability or reducing the inflation. Yes or no? So basically, if I combine all the functions of the government, it can be broadly categorized into three categories. I can divide the functions of the government broadly in three categories. And what are those? First is allocation function. First is allocation function. Second is redistribution function. And third is stabilization function. I am combining the activities of the government into these three broad functions. So, sir, what do you mean by this allocation function? Allocation function, guys, I have told you that government is also involved in the production of certain goods and service. Allocation, which means government is also involved in the production of certain goods or services. Now, can you tell me what kind of goods those will be? One, public goods. Haven't we discussed that? See, these public goods, guys, have to be ultimately provided by the government. Why is it so? It has to be provided by the government because private sector will not enter there. Private sector will not provide for the public goods because there exists what problem? A free rider problem. We have discussed that idea. Second, government is also involved in the provision of merit goods. Why they have to engage in the merit goods? They want the people, they want the overproduction, overconsumption of such merit goods because there is positive externality attached to it. It will have more positive social benefits. Clear? We have discussed that. Third, yes, it has to be involved in the production of strategic sector or defense services. It have to be involved in the production of strategic sectors such as defense. Yes or no? It has to be there. You cannot leave that sector, certain strategic sectors, to the private sector. So government is involved in the allocation. This is one type of function. You can say one area where the government intervention is required. Second, government intervention is also required, or government also performs certain activities to achieve the objective of redistribution. To achieve the objective of redistribution. And what is that redistribution? Redistribution in short means that kind of you are taking money from the rich. This is like you are taking money from the rich and giving it to the poor. Giving it to the poor. And this redistribution, the objective is to minimize income inequality. To minimize income inequality. This is the objective. This is what the government seeks to achieve. And how it does? How does it seek to achieve? First, through progressive taxation. Through progressive taxation. What I mean with the progressive taxation? That means higher the income, higher should be the tax. So that means if you are talking about the rich individuals, they have to pay the higher tax. And these taxes, higher taxes by the rich will lead to higher revenue to the government. And this revenue of the government can be utilized to fund the, or you can say to undertake various welfare schemes. This revenue can be utilized by the government to undertake various welfare schemes or provide subsidies to the poor. Clear? So this is how the government undertakes its function of redistribution. Clear? Government undertakes its function of redistribution. But these are not the only role. The government also plays another very important role, that is stabilization function. In the stabilization function, it is about boosting the economic growth. That is boosting the economic growth. Basically, when I talk about the stabilization, idea is economic stability, how that can be created. So one way is, first you boost the economic growth. Like I gave you an example, if you remember, in the COVID scenario. In the COVID scenario, after the lockdown on 22nd March 2020, what happened? The consumption expenditure declined, the investment expenditure declined, there is no demand, there is no supply, so there is no labor available. So obviously investment expenditure got to decline. Exports are going to decline. Clear? Exports have been declined. Now, when these three sectors have been declined, who will be there to boost the economic growth? That will be government. So thereby, the government expenditure needs to be higher. So don't you think government played a very, very important role in the stabilization of an economy at that point of time? Clear? Not only that, maintaining price stability. Maintaining price stability, which means bringing down the inflation. Maintaining price stability, which means bringing down the inflation. That is also the role performed by the government. Then checking into or act as a regulator to check market failures. To check market failures. This is what about, guys, the functions of the government which we can understand. So once you understand the functions of the government, which can be divided into the allocation function, redistribution function, and the stabilization function, then only you will be able to understand about the fiscal policy. So now let me enter into the fiscal policy. See, what do you mean by now fiscal policy? Fiscal policy is nothing but an action of the government. Whatever action which is taken by the government, so it's an action of a government, through its tools, which are revenue and expenditure, to achieve the various objectives, or to undertake the various functions, such as we have discussed just now, that is allocation. Okay, that is allocation. That is allocation. Then you have redistribution, and then one is stabilization. Clear? These are the functions which are carried out by the government. Now, to undertake these functions, the government uses its tools like revenue and expenditure. These are the only tools available with the government. And when the government uses these tools, the actions of the government will come under the policy known as fiscal policy. Clear? So the actions of the government through its tools such as revenue and expenditure to achieve the various objectives or to undertake various functions, that refers to fiscal policy. Now, based on the objective it seeks to achieve, let me tell you, based on the objective it seeks to achieve, the fiscal policy can be divided into expansionary or contractionary fiscal policy. Based on the objective it seeks, the fiscal policy can be divided into expansionary fiscal policy, or contractionary fiscal policy, expansionary fiscal policy, or contractionary fiscal policy. So based on the objective it seeks to achieve, the fiscal policy can be classified as expansionary fiscal policy or contractionary fiscal policy. Now, what can you understand from the word expansionary? Try to understand. Expansionary, that means expansion of the economy. Are you getting my point? Expansionary means expansion of the economy. So, expansionary fiscal policy is undertaken by the government to boost or to achieve the objective, and what is that objective? Objective is to boost economic growth. Achieve the objective of boosting economic growth. Are you getting my point? So expansionary fiscal policy refers to the policy which are undertaken with a simple objective of boosting economic growth. With a single objective of boosting economic growth. Now, how the government can use its tool? To boost economic growth, the government likes to reduce its revenue. They like to reduce the taxation. जैसे मैं आपको अभी एग्जांपल देता हूं. Do you remember the concept of disposable income, which we have covered in our national income accounting chapter? See, my disposable income will be higher. My disposable income will be higher if the government reduces the taxes. So when the government reduces the taxes, there will be more income in my pocket. More income in my pocket, I will be demanding, I will be consuming more goods and service, which will result into higher aggregate demand. That is what our finance minister had done in the budget 2025-26. Why they have increased the exemption limit, that the people up to 12 lakh, they don't have to pay any tax. Why they have done it? Can you tell me? They have to do it with a simple reason. That reason is that this will encourage the individuals to consume more, and that will have a direct impact on the aggregate demand. Clear? And the second unintended, which the people, they are not able to see, more and more people are likely to comply with the tax rules. They are likely to file the tax returns. So don't you think this will increase the tax base? This will make our economy more formal? Yes. Clear? So if your government wants to expand the economic growth, or they are undertaking an expansionary fiscal policy, they like to reduce the revenue or boost the expenditure. Clear? Just to highlight, look at this. Either the government can boost the expenditure, aggregate demand can increase, economic growth is there, or if the government reduces the personal taxes, individual taxes, more disposable income among the household, they are likely to consume more. Or if the corporate tax is reduced, more people are likely to invest, more private investment. Clear? Aggregate demand will increase. Simple. That's why I told you, remember this. Remember this, guys, if you want to get a feel of the economy. Clear? On the other hand, if the government wants to undertake a contractionary fiscal policy, so what objective they are trying to seek? If they are undertaking a contractionary fiscal policy, the objective they are trying to seek is to maintaining price stability. To maintaining price stability. And when I talk about maintaining price stability, that means bringing inflation under control, reducing the inflation. That is why it is like contracting the economy, contract. And how it can contract? That means how it can reduce the aggregate demand by either increasing the tax rates, so the revenue will increase, or expenditure can be reduced. I told you fiscal policy have only two tools, revenue and expenditure. Clear? So any doubt about that? This is one way of classifying fiscal policy as expansionary or contractionary based on the objective it seeks to achieve. But then there is also another way of classifying the fiscal policy based on the cyclicality. Based on the cyclicality. Based on the cyclicality. So cyclicality of the fiscal policy refers to the fiscal policy adopted, or refers to the adoption of fiscal policy, refers to the adoption of fiscal policy based on the economic conditions. Based on the economic conditions. So whenever you hear this word cycle, whenever you hear the word cycle in an economy, there is only one thing that should come into your mind, that is economic cycle. That is economic cycle, which I'm pretty sure you guys must have gone through in the chapter 2 of the Pulse Prelims book. So economic cycle, what does that economic cycle says? Try to understand. Economic cycle says that, this is an economic cycle. It says that an economy undergoes various phases. Clear? It says that an economy undergoes various phases. What are those? Like this phase is known as the growth phase. This phase is known as the boom phase. This phase is kind of known as the slowing phase, slowing down phase. This phase is known as the recession phase. This phase is known as the depression phase. This phase is known as the recovery phase. That economy is trying to recover. And again, growth, and again, boom. So it says that any economy you talk about, it undergoes various phases. It says there's a growth phase. In the growth phase, what will happen? It says that GDP growth rate, that the growth rate is positive. This is time. So it says that, one minute. So it says GDP growth phase says that in that phase, the GDP growth rate increases. So that means growth rate increases means that our economy is growing at a faster pace. What does that mean? That economy is growing at a faster pace, the growth rate is positive. Clear? The economy is growing at a faster pace. Are you getting my point? So the GDP growth rate is increasing. Now during this phase, what will happen? When economy is growing at a higher pace, employment will be generated. So if I talk more, during this phase, growth phase, employment will be generated. Now when employment is generation, don't you think per capita income is likely to increase? Definitely. And poverty is likely to decline. Clear? So this is what some characteristics of the growth phase. Now suddenly what happens? The growth reaches to the boom phase. Boom phase is the phase when your economy is also known as an overheated economy. Overheated. Hota nahi hai overheated. And overheated, that means economy is growing at that fast pace that economy itself is not able to control itself. कि भैया वो खुद ही अपने आप को कंट्रोल नहीं कर पा रहा है. That is known as the boom phase. Clear? Economy is growing at a very fast pace. But let me tell you, this is the phase when the employment generation is at its peak. When employment generation is at its peak, the per capita income is growing at the fastest rate that is possible. The poverty might be reducing if the growth is inclusive. The poverty might be decreasing. Are you getting my point? Then Sir, this boom phase, let me tell you, it is the most unstable phase. This boom phase is the most unstable phase. Why I'm telling you, you can see from here. If you just slip it from here, you are likely to go down. So boom phase is the most unstable phase. Then slowly what happened? That time goes up. The economy might enter into the slowing down phase. In the slowing down phase, let me tell you, the growth rate is declining. Again, I'm telling you, the growth rate is declining. But still, it is on the positive side. This is 0. This is positive. This is negative. This is 0. But still you see at this phase, the growth rate, again I'm telling you, growth rate is positive, but it is declining. Which means if the economy was growing at a 7%, 8% growth rate at here, the economy might be growing here at 2%, 3%, 4%, like that. But isn't it still positive? Yes. And if the growth rate is positive, the actual GDP is increasing or decreasing? It is increasing. Clear? The real GDP, the value, GDP value, will it be increasing? Yes. Your growth rate at 10% or 2%, it is positive. That means it should be increasing. So the value of the GDP is going to there, increasing. But there comes a phase when your growth rate turns negative. There comes a phase when your growth rate turns negative. Now let me tell you guys, when your growth rate turns negative and if your growth rate, or I would say real GDP, if it is negative, that means when your growth rate is declining or it goes into the negative zone, when growth rate is negative, don't you think your GDP now starts contracting? Agar growth rate negative hai, so that means your GDP now starts contracting. So your real GDP starts contracting. Now when your real GDP, guys, when your real GDP contracts or growth rate is negative, any of these conditions, basically it is going to happen simultaneously for 2 consecutive quarters. For 2 consecutive quarters, we can easily say that country have entered into technical recession. The country have entered into technical recession. Are you understanding? So when the real GDP contracts for 2 successive quarters, that it is contracting, the economy is contracting. And when it is contracting for 2 successive quarters, for minimum 2 successive quarters, we say that economy have entered into technical recession. Clear? Technical recession. Why we are using the word technical? The reason is because sometimes due to external factors, the economy might contract. Sometimes due to external factors, the economy might contract. And when economy can contract, let me tell you, when economy contract, what will happen? What will happen? It will show a decline. That from the measurement, from the indicator, from the quantitative perspective, you can see that. But not necessary this impact is a longer period. This real GDP is contracting might be for a short period of time and it might recover back. That is why the word technical has been used, because we don't know whether this recession is going to be there for a longer period of time. Are you getting my point? So sometimes what happened, like in the COVID, there was no fundamental problem to the economies. No, there was no structural problems or structural issues in the economies. But just because of an external crisis like COVID, it hampered the economy, it affected their growth rate, it affected their economy. And that is why the real GDP contracted for more than 2 quarters. And if they have contracted for minimum 2 quarters, we say economy has undergone into recession. But economy was not having any structural issues, so that's why it recovered very well. It recovered very well just after the first wave. Yes or no? So thereby we use this word technical because we don't know whether this recession has been going into for a long period of time. It is just gone into recession, but technically wise it has gone into recession. Economically, macroeconomically, it is still a decent place. Clear? Now, when we say that, okay, fine, sir, if the recession, which you are saying that the GDP growth rate is negative for 2 consecutive quarters, we say economy entered into a technical recession. Clear? Economy entered into technical recession. But sir, if this technical recession continued for a longer period of time, if this continued for a longer period of time, it will enter into recession. If it is entered into the longer period of time, if it goes for a longer period of time, we will say that it entered into a recession period. Are you getting my point? So what is recession? Recession is when you have for a longer period of time, you are seeing the decline in growth rate. Are you getting my point? The decline in growth rate. So in the recession, what few things you are going to observe? What few things you are going to observe in the recession? First, this is recession. First, your growth rate is negative and for a longer period of time. Clear? When growth rate is negative, your GDP is going to contract. Yes, your real GDP is going to contract. When your growth rate is negative, will unemployment is likely to increase? Yes, unemployment is likely to increase. Per capita income declining. Poverty likely to increase. Yes or no? And the bottom of the economy hit when it reaches into a depression phase. Now, sir, what is the difference between recession and the depression? The only difference between the recession and depression is almost all the things are similar except one. In the recession, there can be firing. There can be layoff of employees. But depression results into the shutting down of industries. Shutting down, forced shutdown, which might not be there in the recession. In the recession, there can be layoffs. There can be, you can say, firing of the people. Clear? To, you can say, cut the cost. But when I talk about the depression means there is a forced shutdown of industries, which is different than this. Apart from that, yes, all of these things are going to be same. Clear? Now, then what happened when economy, as it's this phase, when economy is going down, the country undertakes various measures. The country undertakes various measures to boost the economy. The country undertakes various measures to boost the economy. Those measures are known as economic stimulus. Those measures are known as economic stimulus. The country undertakes various measures. Those measures are known as economic stimulus. Clear? Now, these measures, if it is taken by the government, that will be known as fiscal stimulus. These measures, if taken by the government, known as fiscal stimulus. These measures, if it taken by the RBI or the central bank, I should say, known as monetary stimulus. Clear? So, sir, you are saying that fiscal stimulus measure also refers to expansionary fiscal policy? Yes, guys, you got it right. Fiscal stimulus measure also is known as or also referred as expansionary fiscal policy because the idea is to boost economic growth. Clear? चलो, तो I think अब तो आपको economic cycle clear हो गई होगी. Clear? So once you have understood this economic cycle, now we are coming to the topic that is pro-cyclical versus counter-cyclical. Try to understand from the word pro-cyclical. Pro means along the cyclical conditions of an economy. Try to understand word pro. Pro means along the cyclical conditions. That means pro-cyclical, I can say like that government is likely to take actions. Try to understand. Government is likely to take, you can say, measures which are along the economic conditions prevailing at that time. Are you getting my point? Pro-cyclical simply means that the government is likely to take actions. Government is likely to take actions which is along, that is pro means along, the economic conditions prevailing at that point of time. On the other hand, counter. Counter means the government fiscal policy or the government's action will be counter. That means opposite to the economic conditions, prevailing at that time. Clear? Once you understood this concept, let me just highlight these things for you. Just look at this. Try to कौन सी पेन यूज करें? See, this is a no policy action. Just let me tell you, this one is no policy. This is a normal scenario. Clear? Now, this is a normal scenario of the economy. Now, see, an economy, suppose that this is a normal scenario. Now, you see, economy is growing. This is which phase? This is boom phase. Yes or no? This phase which I am talking about this is boom phase or the growing phase of an economy. Now, if I say, try to understand, if I say that government has adopted a pro-cyclical fiscal policy, if I say that the government has adopted a pro-cyclical fiscal policy, so during this phase, government will be having or government will be undertaking more expenditure or less expenditure. Tell me, so what objective the government would be undertaking at this point of time? Pro-cyclical. Pro-cyclical क्या है? ये कौन सा phase है? This is boom phase. Boom phase is what? Overheated. Where everyone is spending, whether it be household. Remember that 4 sector. Household is trying to consume more goods and service. Investment is doing over-investment, over-expenditure on goods. Clear? Private sector is like doing more and more expenditure. So, thereby, the government, which is also there, what it will be doing? If they have adopted a pro-cyclical policy, so they are likely to undertake an expansionary fiscal policy. They are likely to undertake an expansionary fiscal policy here. And expansionary means higher expenditure, lower tax rate. Now, when government undertake the expansionary fiscal policy during boom phase, don't you think economy will see more growth? Yes or no? Economy will see more growth. Correct? Now, but as I told you, the economic conditions can change. Economic conditions can also go into depression. And when it goes into the recession or the depression phase, household is like, oh, let's save the money. Let's not consume. Yes or no? Investment is like, hey, listen, there is no demand. Let us not invest too much. So what will government do? If they have adopted a pro-cyclical, government is also like, hey, I'm not going to spend my money. I'm also reducing my expenditure. Instead, I'm likely to put more taxes. So thereby, during the depression, the government undertake which policy? Contractionary. And when they undertake contractionary policy, don't you think the demand will further down? The demand will go further down? Yes, that is why you see this is a pro-cyclical policy. Clear? This is a pro-cyclical. But when I talk about counter-cyclical, when I talk about the counter-cyclical, what I mean with the counter-cyclical, let us see that. Now, counter-cyclical means that means this is boom phase. Boom phase. So, government policy has to be counter to the cycle. That means boom means overheated, more expenditure. Government is like, hey, I am not going to invest more. I am trying to save my money for the later crisis. That is what counter-cyclical policy is. So, government will undertake here which policy? Contractionary. If the government has adopted a counter-cyclical fiscal policy, which means they are adopting a contractionary policy. Clear? On the other hand, when there's a depression going on, now when there's a depression going on, so at that point of time, again, counter to the cycle. Counter-cycle means counter to the cycle. So it will try to undertake an expansionary fiscal policy. Clear? Try to increase more expenditure. When government undertake more expenditure, you see economic growth is little bit higher. Clear? So this is what about pro-cyclical and counter-cyclical. Let me just summarize it. If the government fiscal policy stance is pro-cyclical, if the government fiscal policy stance is pro-cyclical, during the recession phase is when the GDP is decreasing, when the GDP is contracting. So pro-cyclical, during the recession phase, when the pro-cyclical, the government is adopting which one? Expansionary or contractionary? Contractionary. Reduced government expenditure or increased taxes. During the expansion phase, when there is an expansion, pro-cyclical policy will be the expansionary fiscal policy. Clear? On the other hand, when the government has adopted counter-cyclical fiscal policy, so during the recession, it is likely to undertake expansionary fiscal policy. And during expansion, contractionary fiscal policy. Clear? But just try to understand this. Clear? Just look at this. Pro-cyclical phase. Don't you think pro-cyclical phase deepens more recession? Pro-cyclical phase, if the recession is there this much, pro-cyclical phase क्या कर रहा है? और recession और demand कम कर दे रहा है. Yes or no? And amplifies expansion, thereby increasing fluctuations in the business cycles. On the other hand, if you look at the counter-cyclical, it is softening the recession, clear, and moderating the expansion, thereby decreasing fluctuation in the business cycle. Clear? So this is all about the cyclicality of a fiscal policy. I hope that you guys have understood at least this much first of all. Now, moving to the most important tool of the fiscal policy, that is budget. While the government independently takes actions over a year, but most of the actions which they are going to take over a year has been highlighted in the budget itself. But most of the actions which the government take over the year is already highlighted in the budget itself. Clear? So that is why I could tell you that budget is a very, very important tool. Very, very important tool of fiscal policy. Now, what is this budget? What is this budget? Now, generally, if I ask you what is a budget, you guys will tell me that, sir, budget is an estimation, sir. Budget is more of, there is a statement. Budget is a statement consisting of, budget is a statement consisting of estimated receipts and expenditure. Budget is a statement consisting of estimated receipts and expenditure. This is like you can say one way of understanding the budget. Are you wrong? Not at all. You are perfectly right. But budget is more than that. Okay. So many of you think that, okay, budget is a statement consisting of the estimation of receipts and expenditure. But let me tell you, budget is not only that. It reflects the priorities of the government. It reflects the priorities of your government. It reflects the hopes and aspirations of the people. That, okay, these initiatives are a part, or you can say the aspiration of a people. Just look at again, why I'm using this 12 lakh, bar, 12 lakh example, because you guys know that only. See, if like you see this, there's an aspiration of the people that, okay, especially the salaried middle class, that the government should increase the tax exemption. Government should increase the tax exemption so that the middle class has to pay the lower the taxes. And that is what budget has done it, fulfilling the hopes and aspirations. So budget is more than just a quantitative. Let me tell you, budget is more than just a quantitative statement of estimated receipts and expenditure. It is about the priorities of the government. You will find out if the government likes to invest more on the infrastructure. If you think that, okay, government focus is infrastructure development, you will see a major chunk of the resources will be given to that ministries for infrastructure development. If the government focus is on the social sector, you will see the government resources will be given to majorly to the social sector. So this clearly reflects that what are the priorities of the government. Fulfillment of the hopes and the aspiration of the people. Not only that, it is also about an instrument of change, bringing the initiatives which can create a change. I still remember there was a Nirbhaya fund that was created. Nirbhaya fund that was created some 10 years back. And for what purpose? For the safety of our women. So budget can be used as an instrument of social change. You can see here, clear? Social welfare. Then the budget can also be helpful in playing the redistribution of income through higher taxes on the rich and announcement of various welfare schemes or more subsidies for the poor. Clear? More subsidies for the poor. Budget can also be a tool for providing a rapid and balanced economic growth. Clear? There are various functions that the budget performs. Not only that, it can also be used as a punitive action. How? Like suppose there's a particular department or ministry have not performed well. So government is like, okay, you have not performed well, you have not even spent the last year's money. Why should we give you this year? They will reduce the resources allocated to them. Yes or no? So that can be used as a tool of punitive action, punishment to the ministries or departments who have not even spent the funds nicely, who have not even delivered the outcome. Why should we continuously or consistently giving you the resources? Why? Not at all. Getting my point? That's also a tool of coordination, bringing various ministries and departments together to create a budget which can fulfill, again I'm telling you, which can fulfill the hopes and aspirations of the people. Go for the national development or the welfare of the people. Clear? So now, fine, sir, you have given some descriptive idea about the budget. I'll be stopping it here with respect to the descriptive idea. That more things we are going to see in our mains lecture. But now let me entering into the legality, or first of all, I will talk about the constitutional provisions of budget. Constitutional provisions. It is very, very important. From here, you might find the next two things which I am going to discuss. From here itself, you can find some questions in the examination. So first is constitutional provisions. That what constitutional provisions govern the whole budget thing. First is article number 112. Article 112 clearly states about annual financial statement. Article 112 clearly states about annual financial statement. Now, what I mean with the annual financial statement, Article 112 or any provision of the Constitution, let me tell you, the term budget is nowhere mentioned in the Constitution. The term budget is nowhere mentioned in the Constitution. The term budget is nowhere mentioned in the Constitution. Clear? So, sir, what is mentioned in the Constitution? Let me tell you again, the Constitution mention about annual financial statement, which is a statement, again I'm telling you, of receipts and expenditure. Statement of receipts and expenditure. Now, Article 112 also talks about one very important thing. Article 112 also talks about, or it confers this constitutional responsibility on President. It confers this constitutional responsibility on president to ensure that budget is laid down, to ensure that budget is laid down before both houses of parliament. Budget is laid down before both houses of parliament. Budget is laid down before both houses of the parliament. This is what the responsibility given to the president. While yes, Ministry of Finance, Minister of Finance present the budget in the parliament, but constitutionally that responsibility of ensuring, I'm not saying of presenting the budget, constitutional responsibility of ensuring this annual financial statement to be laid down before both houses of parliament, that is the responsibility given to whom? The president. That is the responsibility given to whom? The president. This constitutional responsibility. Clear? Now, not only that, constitutional responsibility, ये तो लिखा ही नहीं कि किसको दी है. That budget is laid down before both houses of parliament. This constitutional responsibility goes to the president. Clear? Not the finance minister. Next, not the finance minister. Next, Article 112 itself state one other thing. Article 112 itself says that the estimates of expenditure, it should show separately the charged expenditure. Estimates of expenditure should show separately. Estimates of expenditure should show separately the charged expenditure and other expenditure and non-charged, or you can say votable expenditure. Now, what I mean with the charged expenditure, I'm pretty sure charged expenditure is the one for which the discussion can happen in the parliament, but it cannot be put to vote. It cannot be put to vote. And apart from that, there are other estimates of expenditure. There are other estimates of expenditure for which the discussion and voting can take place. Article 112 clearly states this. Not only that, it also highlights, Article 112 clearly highlights that, okay, whose expenditure is charged upon CFI. Article 112 also states that whose expenditure is charged upon CFI. That is also mentioned in the Article 112. Now, obviously, आप लोगों ने वो polity में पढ़ा होगा, whose expenditure is charged upon CFI, so I'm not going to go into that detail part. But Article 112 also includes the last thing. It says that the expenditure should show separately on revenue account. Should show separately on revenue account from other expenditure. From other expenditure. So expenditure on revenue should show separately on revenue account from other expenditure. Clear? Expenditure should show separately on revenue account from other expenditure. So that is why, don't worry, when I'll show you the expenditure, you will also see that, अच्छा, sir, हाँ, revenue और capital other अलग दिया है, charged, non-charged अलग दिया है, charged or votable expenditure is shown differently. I'll tell you that, don't worry. So Article 112 is about this. Now, what about the procedure with respect to this estimates? What about the procedure with respect to the other estimates of expenditure? Other estimates of expenditure means that I'm not talking about the charged, apart from the charged. That is mentioned in Article 113. That is mentioned in Article 113. Article 113 refers to or provides for the procedure with respect to other estimates. Are you getting my point? Article 113 provides for the expenditure estimates. So that is for the, like, Article 113 provides for the expenditure, other expenditure, that is how it should be, you can say, passed in the parliament. So the other estimates of the expenditure has to be given in the form of demand for grants. So Article 113 says the other estimates of expenditure has to be given by the ministries or departments in the form of demand for grants. So Article 113 mentions about demand for grant. Now what is that demand for grant? Understand from the word itself. Demand, it's a demand by the department or ministry for grants. Grants means there is no liability. There is no liability. And when there is no liability, tell me, when there is no liability, does it have to be repaid back by the department? No, it don't have to be repaid back. So that is why Article 113 says that the expenditure estimates by the department or ministry have to be given in the form of demand for grant. And these demand for grant means that amount which should be given to the department or ministry in the form of grants. That's why not incurring any liability. Not incurring any liability, that means don't have to be repaid back. Clear? But one more provision is mentioned in Article 113, that no demand for grant, it cannot be introduced without the prior recommendation of President. Without the prior recommendation of the President. Are you getting my point? Without the prior recommendation of the President. So once the President recommend it, then it will be introduced in the Parliament. And let me tell you, Parliament, it can only be introduced in the House of People. Can only be introduced in the House of People. Can only be introduced in the House of People. Clear? So tell me any doubt here. Now, next is Article 114. Article 114. So what about Article 114? Article 114 says that fine, the Parliament, try to understand, the Parliament might have approved. It says that Parliament might have approved your demand for grants. Clear? But you are still not authorized to withdraw the money from the Consolidated Fund of India. Are you getting it? You are still not authorized to withdraw the money from the CFI. For that, Article 114 comes into picture. Article 114 says no money shall be withdrawn. No money shall be withdrawn from the CFI. Except under law by appropriation. Except under law by appropriation. So that is why you will always find out that there is a need to introduce appropriation bill, because once the appropriation bill is passed, which means the Parliament has legalized or allowed the executive to withdraw money from the CFI for the approval or for the purpose which we have approved in our demand for grant. Clear? Now, one more thing I like to talk about this appropriation bill. See guys, appropriation bill is less likely, you are less likely to introduce amendment in the appropriation bill. Why? Because appropriation bill just is a kind of formality to legalize the approval of money, or sorry, withdrawal of money from the CFI. अगर आप बोलो appropriation bill में नहीं, this money you which are asking is very high. अरे, when the money, if you want to reduce the money, you should have discussed it at the time of demand for grant. Why are you then introducing an amendment to reduce the money, like to reduce the fund available under the appropriation bill? So that amendment shall not be introduced, or that amendment shall not be accepted in the appropriation bill. Clear? Next is Article 117. Now, Article 117 talks about finance bill. Clear? Article 116 talks about finance bill. Finance bill is nothing but a money bill which is imposing taxation. Finance bill is nothing but a money bill imposing taxation. That's it. So finance bill is introduced if the government wants to bring any changes in the taxation related matters. Clear? So these are the constitutional provisions that govern the budget thing. Constitutional, you can say the legality. Clear? Now, what about the process, budgetary process? Let me elaborate that budgetary process for you guys. Budgetary process, it starts with the first concept known as budgetary formulation. Budgetary process starts with the formulation of budget. Now, when I talk about the formulation of budget, the first thing that come into picture is who has the responsibility to formulate the budget? It is actually the Department of Economic Affairs under the Ministry of Finance. So, Department of Economic Affairs under the Ministry of Finance is responsible. Department of Economic Affairs under the Ministry of Finance is responsible for the overall formulation of budget. And how does it happen? Suppose, let's talk about budget 2025-26. Now, this budget 2025-26 has to be presented on 1st February. Yes or no? So, it was presented on 1st February or not? Now, to present the budget, actually the work starts in the month of August to September. In the month of August to September. I am taking this as a, you can say, benchmark to talk about, to explain you better. So, in the month of August to September, what will happen? Department of Economic Affairs issues a circular. Issues circular to all the departments and ministries. Issues circular to all departments or ministries. Clear? It issues circular to all the departments or ministries. So that it issues a circular to all the department or ministries that please give your estimates in the form. Please give your estimates in the form which is given to you. So in the form and the manner कि इसी form और इसी manner पे देना है. So it issues a circular to all the departments or ministry to give their expenditure estimates. To give their expenditure estimates in the form and manner which has been given to you. Now, when these department or ministries were preparing their estimates of expenditure, they have to provide 4 kind of estimates. They have to provide 4 kind of estimates. And what are those 4 kind of estimates? First, it has to provide the budget estimates of next financial year. Next financial year is 2025-26. Clear? क्योंकि आप ये देखो, when the budget is presented on 1st February 2025, that means it's a part of the current financial year, and current financial year is 2024-25. Clear? So if I'm talking about the budget estimates, the first estimate the department or ministry have to give is budget estimates of next financial year, which will start from 1st April 2025. Second, it have to give revised estimates of current financial year. Current financial year is 2024-25. Now, why? Because you see, now we can get much more better estimates because it's already been 8 months of the current financial year, like April, May, June, July, August, September, October, November, December. So almost 9 months have been passed. So when 9 months data is already available, 8 you can say, 8 to 9 months. Clear? Because once you have the data of 8 to 9 months, you can tell me that, okay, the expenditure which you demanded at the time of presenting the budget and how much it has been spent in 8 months, can you tell me that, okay, what are your estimates, how credible it was? So revised estimates, and these revised estimates will be compared with budget estimates of current financial year. And then one more estimate is actual estimates of previous financial year, that is 2023-24. 2023-24. Clear? This is the actual estimate. So these are the four estimates that the department or the ministry has to present in their demand for grant. Apart from that, while preparing for these estimates, I have already told you under Article 112 that these estimates have to be shown separately as revenue account and capital account. Yes or no? This is a requirement under Article 112. This is a requirement under Article 112. And even under revenue and capital, guys, even this have to be divided as charged expenditure and votable expenditure. Yes or no? This is how the department or ministries has to present their estimates. And these estimates which the department or ministry present, that is known as demand for grants. That is known as demand for grant. Clear? Now these demand for grants, try to understand. These demand for grants goes to whom? Goes to the Department of Economic Affairs. Then Department of Economic Affairs also issues a circular to the revenue earning ministries that guys, please you also give your revenue, like you also tell me your estimates how much you are going to earn, because then only we can be able to prepare a statement of estimated receipts and expenditure. Then only we will be able to do that. Yes or no? And then like some whatever you can say, that some cutting of expenditure, giving more expenditure or giving more funds to the particular ministry, all that is dependent upon the priorities of the government, what priorities they have wished for, what priorities they wanted to implement. And like that, the budget gets formulated. But before I move to the next step, let me show you that there are four estimates of budget expenditure along with this, so that you get more confidence. Because once you are able to relate these concepts with the current budget, you will be able to solidify your concepts. Let me show you. Just look at the estimates that is presented in the budget. This is simply budget at a glance. Look at the estimates that is presented in the budget. There is a budget estimates of the next financial year 2025-26, revised estimates of current financial year, budget estimates of current financial year, actual estimates of previous financial year. Yes or no? Four estimates, four type of estimates. This is budget at a glance. But when I talk about in the demand for grant, 2025 demand for grant, when I talk about in the demand for grant, which is presented by the department or ministries, now look at that. First of all, four type of estimate: 1, 2, 3, 4. This is budget estimates of next financial year, revised of current, budget of current, actual of previous. And for every estimates, it is either revenue, capital. And even under revenue or capital, how much is the charged expenditure, how much is the voted expenditure. Clear? This is what we have covered. Guys, this is what Constitution has demanded under Article 112. Clear? Now, one more thing I like to talk about. Sir, can a single ministry have more than one demand for grant? Yes. Big ministries have actually more than one demand for grant. Just look at Ministry of Agriculture. They have 2 demand for grant. Look at Ministry of Chemicals. They have 3 demand for grant. So can a single ministry have more than one demand for grant? Yes. Yes. Clear? So this is how budget got formulated. Now come the second part, that is budget enactment. Clear? Formulation is done. Now the second step is budget enactment. Actually, this budget enactment is of your polity part. So I will be only giving you a summarized idea of budget enactment. If I talk about the budget enactment, the first thing that should be there in the budget enactment is the presentation of the budget. Presentation of budget. Now, if I talk about that presentation of budget, when will the budget be presented? Is it mentioned in the Constitution? No. So when will the budget be presented? On the day as decided by the President of India. The budget will be presented, or I would say specifically, Annual financial statement, which is mentioned under Article 112, will be presented on the day as decided by the President of India. Earlier, budget used to be presented on the last day of February, 28th or 29th, depending upon whether the year is a leap year or not. So earlier the budget was presented on the last day of February. But in 2016-17, the budget, there was a change, there was a budgetary reform that was undertaken, and the date of presentation of budget was shifted from the last day of February to first day of February. Clear? The budget date was shifted from the last day of February to first day of February. I hope you understand. Fine, budget got presented. Budget got presented. Now we know that the budget is presented on the first day of February. As soon as the budget is presented, on that day, budget is tabled in the parliament in both the houses under Article 112. Then, one day or 2 days basically on, then the next step in the budget enactment was general discussion. The general discussion about the budget. Now, when will this general discussion about the budget will happen? General discussion about the budget will happen on the day decided by the speaker. General discussion will happen. Let me just keep it right now. On the day decided by President of India. Clear? And then here, general discussion that will happen on the day decided by the speaker. Clear? That is actually the presiding officer. So general discussion will happen. Now, for how much time? For how many days? Again, it is dependent upon the speaker. How much days? Again, it is dependent upon a speaker. Clear? Now, during this general discussion, does the members have any voting rights? No. The members cannot vote. There is no voting right. There will not be any voting that will happen on any clause of the budget. There will not be voting. It's about simply general discussion that will happen. Once this general discussion period get over, then the session goes for a break, and that break will happen for a 2 to 3 weeks. During that break, the demand for grant will be scrutinized. The demand for grant will be scrutinized by DRSCs. This demand for grant will be scrutinized. Scrutiny of DRSCs by scrutiny of demand for grant by DRSCs. Scrutiny of demand for grants by departmentally related standing committees. Now, I am not elaborating about DRSCs, but देखो मैं क्या करता हूं, मेरा तो एक सिंपल सा कंसेप्ट है. मेरे को एक वर्ड मिल गया, I need to know basics about that. So you should also know about DRSCs. Dear, मेरा तो सब्जेक्ट है नहीं, but still even I know that okay, DRSCs, they are 24 committees, 16 from the Lok Sabha, 8 from the Raj Sabha, then some more technicalities. Now the reports which are submitted by the DRSCs with respect to the scrutiny of demand for grant, these reports are not binding. They submit non-binding reports, non-binding recommendations. But you have to answer more that whether a minister, whether any minister can be a member of the DRSC or not. What is the tenure of a member in the DRSC? All these things, guys, you have to do. Clear? So there is a scrutiny which is done by the demand for grant for that break. Now again, parliament session that got reconvened, and in the reconvening of the parliament session, what will happen? There starts discussion and voting on the demand for grant. Discussion on voting on demand for grants. Okay? DGs I am just writing as demand for grant. So discussion and voting started. Discussion, voting, continuously it is getting passed. Somehow, like suppose talk about 30th demand for grant, the members were not agreeing. They were not agreeing. They are like, listen, I like to introduce a cut motion. The members can talk about, the members can introduce a cut motion. There can be a possibility of a cut motion. And these cut motion, guys, can be of three types: policy cut motion, token cut motion, economy cut motion. Not elaborating again, but you guys can go through that. Clear? Now, once like this, the discussion and voting of demand for grant is happening, then what happens is like, see, the members, they are unable to discuss all the demand for grant. You generally take too much of time in discussing and voting. And there are 100 plus demand for grant. So speaker, what it does, on one date simply at the end, like they are like, okay, now let's finish that budget. What it says that, okay, now let me put all the remaining demand for grant club together and put to vote together. That process is known as guillotine. That process is known as guillotine. So in the guillotine, what will happen? The speaker has combined all the remaining demand for grants and put to vote together. Clear? That process is known as guillotine. Those demand for grant have not even been discussed in the parliament. Clear? Then sixth. Now see what happened till fifth. Parliament has approved, legislature has approved the demand for grant which have been asked by the department or ministry. They have just approved. But still the executive is not authorized to withdraw money from the CFI. For that, they have to fulfill the Article 114, that is the passage of appropriation bill. Passage of appropriation bill. Appropriation bill, guys, is nothing but simply fulfilling or complying the Article 114. Passage of Article 114, passage of appropriation is nothing but simply fulfilling the compliance or constitutional requirement of Article 114. Clear? That is known as budget. Next part. Clear? And the last step in the budget enactment is the finance bill, which involves the matter related to taxation. In this finance bill, amendment is possible. And generally, we'll find out the amendments happen in the finance bill. Clear? And once the finance bill is passed, the budget gets enacted. The budget process gets completed. This is known as budget enactment. Now, once the budget gets enacted, what will happen the next? The budget starts implementing. Budget starts implementing from the 1st April 2000. Clear? Budget starts implementing from the 1st April 2025. That's a new financial year. Ministries or departments, they have been given the money for the initiatives. Yes or no? But somehow while implementing any project, they're short of some money. They asked from the legislature about 500 CR, but now they're short of some money. They need 600 CR for that project. So 100 CR they are short of. Or it might be possible that they thought, okay, they come up with a new element in that project which need another 100 CR. So in that case, from where the executive take money? From where the executive will bring money? So what happens during the budget, like during the financial year itself, the executive gets passed and another demand for grant known as additional or supplemental demand for grant. Additional or supplemental demand for grant based on the objective. Whether they are needing more money for the same project, their estimates gone wrong, or they are introducing new element in that project, for that they need more money. So based on that, additional or supplemental demand for grant. Like that, keep on spending money, and suddenly what happened? February 2026 came and a particular ministry have not spent the complete funds. They have not even spent the complete funds. They are like, if we do not spend the money, this money will go back. This money will go back to whom? To the CFI. So, sir, you are saying one thing. I like to say here, the money which have been given to the department or ministries in the form of demand for grant, that is lapsable fund. The money which have been given to the department or ministries in the form of demand for grant, it is lapsable fund. It is lapsable. Now, when I say lapsable, which means that the department or ministries, they are not able to spend the money. They're not able to spend the money in that financial year. The money will go back to the CFI. That is called lapsable. अब किसी डिपार्टमेंट और मिनिस्ट्री को मजा आएगा to give back the money to the CFI? No. So what they does, they spend the remaining amount of money in the March month. In the March month. And that leads to a process known as March rush. That leads to another phenomena known as March rush. That means March rush means the department or ministries, they like to spend money during the March month because they know that if they do not spend it, these funds are lapsable, go back to the CFI. Clear? Now, the last step in this budget implementation is budget monitoring. Budget monitoring. Clear? Budget monitoring. What I mean with the budget monitoring? Budget monitoring has to be, see, legislature has given money to whom? To the executive. To the executive that you spend the money. But legislature has to check that whether the public money which we are giving to you, whether you are spending the money for the right purpose or not. Whether are you not overspending on a particular project. Yes, you have demanded 1,000 crore and we have given it, but haven't you like overestimated? The project might have been done in 400 CR, 500 CR. Or are you diverting the public funds? Or you can say misutilization of public funds. So for that, the monitoring is required. And this monitoring can be possible through various tools such as motions in the session, like censor motion, adjournment motion, no confidence motion, like that. Then there can be discussion sessions, half an hour discussion, question hour, 0 hour, 0 hour, yes or no. Not only that, then there are committees, parliamentary committees, such as your Public Accounts Committee, your Estimates Committee, your COPU, Committee on Public Undertaking. What are that? These committees are there to ensure the accountability of public money. Then there is one more important point, that is CAG. Clear? This is the whole budgetary process, guys. This is the whole budgetary process. From the formulation till the monitoring here. I want you that if you can take the screenshot of it, it will be really, really better. So now, let me actually enter into the components of budget. Honestly, from here starts the economic part of the budget. Whatever we have discussed as of now, especially the constitutional provisions I talk about, or even in the budgetary process, see, actually that come under the polity aspect. But I personally feel that if I'm covering the budget, I should cover the budget from the most comprehensive manner at a single place. That is why I always take, irrespective of whether the Kumud sir have taken in the polity classes, I always take about these provisions in our lecture itself. Clear? Now let me entering into the components of budget, that how budget is classified. If I classify the budget, you will find out that it will be divided into, or it is classified into two components. One is revenue budget and second is capital budget. So one we have revenue budget and other we have capital budget. Now revenue budget and capital budget, what does it mean? Basically, we have divided the transactions into the revenue account and capital account. Now, when I talk about the revenue account, guys, revenue account is more about recurring transactions that happen. Revenue account is more about recurring transactions. Obviously, see, there will always be exceptions, but it is likely to have recurring transactions. Then it is not generally, I'm not using the word always, it is not generally associated with assets and liabilities. Associated with assets or liabilities. Clear? So it is more like a regular or the recurring income, or not just only income, but regular or recurring income or the expenditure item that fall in. On the other hand, when I talk about the capital budget consists of the transactions which are non-recurring. Means they are mostly one-off transactions or on-off transactions. Second, this consists of the transactions which are associated with assets and liabilities. This consists of the transactions which are associated with assets and liabilities. Now, each budget comprises of or can be subclassified into two things. That will be, one is revenue receipts. This is revenue receipts. And second is revenue expenditure. Yes or no? So in each component, you will find this. That is, one is receipts and another is expenditure. For capital, if I talk about capital budget, it is capital receipts and capital expenditure. Now, what I mean with the receipts and expenditure? See, receipts mean the very simple thing. Receipts means the money coming in. The money coming in is known as receipts. Money going out is known as the spending or the expenditure. So both the components, both revenue budget and capital budget, will comprises of transactions which could be, that's why I'm using the word transactions, which could be receipt. If it's a receipt, again understanding receipt means if the money coming in. Clear? Going out, known as expenditure. Receipt, money coming in, going out, known as expenditure. On the other hand, if I talk about capital budget, comprises of receipts coming in, going out, expenditure. Clear? Now, these revenue receipts can be further classified into tax revenue, tax receipts, or non-tax receipts. On the other hand, these capital receipts can also be further classified into debt creating capital receipts, or non-debt capital receipts, non-debt creating capital receipts. Clear? This is, I would say, first of all, try to understand a general in an overview about the budget components. Because you must have seen that, okay, government is earning revenue from, you can say, direct tax. Government is earning revenue from corporate tax. Sir, in which type of receipt? And see, it's earning. So that means the money coming in, it will fall in receipts. Will it fall in capital receipts or will it fall in revenue receipts? You have to identify. So that is why you need to understand, first of all, that how this budget is classified. Into revenue budget, capital budget. Clear? Broadly, I can say revenue budget comprises of a recurring income and not associated with assets and liabilities. On the other hand, capital budget broadly refers to one-off transactions and generally, and mostly, I would say, not generally, mostly associated with assets and liabilities. Clear? Now let me go deeper into these components. Let me compare these two types of receipts, first of all, revenue receipts and capital receipts. Because these receipts are what we call it as the total receipts of the government. See, if I talk about revenue receipts, revenue receipts are those which are recurring. I told you, which are likely to be recurring. Clear? Second, it is non-redeemable. When I say non-redeemable, which means It cannot be reclaimed back. Which means it cannot be reclaimed back. So if I talk about these revenue receipts, guys, revenue receipts are the receipts which are recurring in nature. Recurring in nature, generally happening. That is what the characteristic of revenue budget. But very important aspect is these are non-redeemable. That means it cannot be reclaimed back from the government. Once this receipts goes to the government fund, you are not liable to claim it back from the government. Clear? Now, these receipts I told you can be further divided into tax revenue and non-tax revenue. Clear? So, government now can earn these. These receipts are actually, let me tell you, these receipts are actually the earnings of the government. These receipts are actually called the earnings of the government. Earnings of the government, because this is what the government has earned. And how it can earn? It can earn through basically through two kind of revenue receipts. One is tax revenue. This tax the government can mobilize either from direct taxes or indirect taxes. So government can mobilize its earning from the tax revenue either through direct taxes such as income tax, corporate tax that fall here, or indirect taxes such as GST, custom duty, excise duty. Definitely we are going to see this in detail in our taxation chapter. But as of now, you should know that government can mobilize its resources through the tax revenue under the revenue receipts. And don't you think so? This tax revenue is more like recurring in nature. That every year you have to pay the taxes. Yes or no? Now, when you have to pay the taxes, can you claim it back from the government? No. You cannot get it back. Okay, bhaiya, this is kind of your duty to pay these taxes. This is the amount you have to pay. You are liable to pay this much of tax. Clear? So this is what the tax revenue. But there are other receipts of the government, or you can say the other earnings of the government which are not tax based. There are non-tax revenue. Like first is interest on the loans given by the government, given by the central government. Yes or no? See, you must have seen that central government might have given the loans to the outside countries, or they might have given loan to the state government. So the interest they get, the interest payment they get, that's an earning of the government. Where will it fall? It will fall under the non-tax revenue. And isn't it this interest payment recurring in nature? Definitely. So that is why under the revenue receipt. Next, apart from that, the second is dividend and profit from PSUs, or you can say from their investment. See, government might have made investment by having the PSUs. So if the PSU is making profit, that profit owns to whom? That profit goes to whom? The central government. Dividend, they might get dividend. Just like as a shareholder, I get dividend, the government might have stake in various companies. They might be having 100% stake, or they might be having some amount of stake, 30%, 40% or 10%. They are liable to get dividend. Like you see, every year RBI gives dividend to the central government according to the profits it earns. So how does RBI earn profit? We'll see that later. But every year RBI gives profit to the central government. So that RBI dividend, where will it fall? It will fall here. Next, the fees and charges on various service provided by the government. The fees and charges provided, charges on various service provided by the government. Whether you talk about user charges, water bills, electricity bills, that money going to the government. Next is grants. This is important. Grants from foreign countries. Foreign countries or multilateral institutions. Or multilateral institution. These grants, guys, these grants fall under the non-tax revenue. Please do that. Please keep that in mind. Many of you might think, sir, this grant is not recurring in nature. Yes, it is not recurring. You're not getting every year the same month. You're not getting every year the kind of the grants, but it is non-tax revenue. That is why whenever I say this word, I always say mostly recurring. I haven't said always recurring. Clear? So if I talk about this revenue receipts are the receipts which are like mostly recurring but non-redeemable. That means they don't have to be given back to the government. There's no reclaimed back. You cannot be reclaimed back from the government. Sorry. Clear? You cannot reclaim it back from the government. And second other important aspect of the revenue receipts is they are not associated with assets and liabilities. They are not associated with assets and liabilities. Clear? They are not associated with assets and liabilities. It is mostly, we can say that these are the earnings of the government. Earnings of the government. Clear? So this is how you can understand about revenue receipt. But now let me elaborate on the capital receipts for you guys. If I talk about capital receipts are those receipts, which are not recurring, which are not recurring, but very important, guys, it is associated with assets or liabilities. It is associated with assets or liabilities. It is associated with assets or liabilities. Clear? So it is recurring in nature and also associated with assets and liabilities. Now, if I elaborate more about these capital receipts can also be further subclassified just like revenue receipt. Now, capital receipts, there can be two things that can be possible. One, the capital receipts can be the receipts which can result in increase of liability. Which can result in the increase in liability. Which can result in the increase of liability. If the liability increases, the receipts which increases the liability, those receipts are called debt creating capital receipts. Those receipts are called debt creating capital receipts. So the government might take some money, which is like, okay, money is coming to me. Try to understand. The government might take some money from outside, which is resulting to an increase in liability, such as borrowings. It is resulting to an increase in liability. Clear? So those are called debt creating capital receipts. Why? Because they are creating a debt on me. They are increasing the liability on me. And they are capital receipts because it is associated with assets and liability. Liability is increasing. And second, it is not recurring. Clear? On the other hand, there are capital receipts also consist of those receipts. Again, I'm saying capital receipts also consist of those receipts which can result in the reduction of assets. Which can result in the reduction of assets. So when those receipts result into the reduction of assets, that will be known as non-debt creating capital receipts. Non-debt creating capital receipts. There might be some receipts of the government. There might be some receipts of the government which can result into the money going to the government, but without increasing in liability. Without increasing the liability. And those receipts are not, you can say, one-off. Those receipts you can generate by selling off your asset. by selling off your asset. Like suppose आपने देखा होगा जो कंपनीज होती हैं, the company founders, they dilute a certain stake. The company founders, they dilute a 10% stake or 11% stake, like that. If the company founders dilute this stake, so they are reducing their asset in exchange of what? The money. In exchange of the money that will be coming up. And those money is what? Called receipts. That will be called non-debt capital receipts, because it is not increasing the liability. Clear? So, sir, what are the examples of capital receipt? Just like you have mentioned here, sir, what can we write here? See, if I talk about debt creating capital receipt idea is clear. Debt creating, that means increasing liability. This will comprise of all the borrowings. This will comprise of all the borrowings made by the government. This will comprise of all the borrowings made by the government, borrowed by the government. Because all the borrowings, when I say all the borrowings, means the government can borrow, which means the government can borrow from banks or financial institutions. When I use the word financial institutions, which means it could be insurance company, mutual fund, NBFCs, like that. So banks or financial institutions. Then it could borrow from even RBI. How it can borrow from RBI, I'll tell you later. Through WMA. It can borrow from the public itself. Through small saving schemes. That is another thing. It can also have external borrowing. Clear? It can borrow from outside. Now this, when you borrow from outside, you can borrow from countries. Please remember this word borrowing, I am writing it here. Countries or institutions. Clear? So basically, debt creating capital receipts are those receipts, again I am highlighting, are those receipts of the government which is resulting to an increase in liability. That means it is creating a debt on the government, which can be any of these things. Borrowing kahin se bhi. Clear? But then, sir, what are those receipts which are capital but not resulting into a liability? It's not liability, but those are capital receipts. There are actually two examples that fall here. One example here is first, recovery of loans. Suppose the government might have given 100 rupees loan to you. Now, on that 100 loan, what you are giving to the government? On that 100 loan, you are giving an interest. Now, that interest which you are giving to us is regular. Yes or no? That interest which you are giving to us is irregular. That interest to the government fall under the non-tax revenue. But what happens after a year? You are like, hey, listen, government, I'm done with giving you interest. You take your loan back. So you see the government asset which was generating returns, an interest of 10 rupees every month. Then what has happened? That asset have been reduced because that loan has been recovered back. When that loan has been recovered back, the government assets increases or decreases? Assets decreases. Because see, asset is something which can generate return. Now, when the loan has been recovered back, government assets have reduced, lesser interest payment to the government. Clear? So, in that case, that recovery of loans which have been done, again I am telling you that recovery of loans which have been done, that has not resulted in an increase in liability, but that has reduced the assets. So, even this also come under the capital receipt. Second, I told you, dilution, when the company dilutes its stake, or you can say sells some part of its stake or some part of its company in exchange for remuneration, in exchange for the funds or the resources, financial resources. Clear? Even the government can also sell. Government is having huge stake in the public sector undertakings, PSUs. And if the government sells that stake in the PSUs, what will government get? The money. The government will be able to mobilize resources. Yes or no? Like what we have seen while selling Air India or diluting some part of LIC. So what the government have been able to do it, government have been able to mobilize the resources. This process is known as disinvestment. disinvestment. Any doubt here? Clear? So you should know that where the receipts fall. First of all, you should not forget receipts means the money coming in. The money coming in. Clear? And where the receipt should fall, if it is a recurring, not associated with assets and liability, it is likely to be in the revenue receipts. Revenue receipts, if it's a taxation, it will fall in tax revenue. Otherwise, it is going to be non-tax revenue. Capital receipts is very, very easy. If it's a borrowing, it will go to debt creating capital receipt. Otherwise, if there is these two options in the question, that will fall under non-debt capital receipts. Clear? Now let me show you the budget trend, guys. So now if we look at the budgetary trends about the net receipts of the center, let me tell you that what all we have covered. You see, we have seen the estimates already. You see the total receipts is divided into revenue and then you have capital receipts. Under the revenue, we have seen about tax revenue. You can see all these type of tax. And then there is non-tax revenue. What all non-tax revenue which we have already seen? Interest receipts, dividend and profit. I have told you the RBI's dividend also goes here. External grants. Clear? And then there are other non-tax revenue which includes the fees and user charges and charges for different kind of other services. Clear? Most important, if you look at this other trend of net receipt of the center, you will find first of all that there are only 3 receipts mentioned here, not debt receipts. Why? Because that is not the earnings of the government. These net receipt, if I talk about, these represent the earnings of the center. Clear? Earnings of the center. And in these earnings of the center, you will find out that center's net tax revenue has been the highest. It has been the highest, constituting almost, if I count, 28.6.6, so come out to be 35. So 28 by 4 by 5. So almost 80% of the total receipt is formed by 80% of the total receipts is, or the earnings is mainly by the center's tax revenue. And one more thing, if you try to understand, center tax revenue is more than non-tax revenue, and this is more than the non-debt capital receipt. And the last trend that I want you to observe from here, if you look at in absolute terms, if you look at in absolute terms, you will find out that the center's net tax revenue has been increasing over the last 10 years. Center's tax revenue has been increasing over the last 10 years. This is the trend understanding from the budget itself. Clear? Till now we have seen the receipts, okay, the receipts of the budget, that from where the government is earning, and if they are short of the expenditure, like if they are short of expenditure, they are taking money in the form of borrowings, which we call it as debt creating capital receipt. But sir, what about the expenditure? Sir, you have also shown in that components of budget that both component revenue and capital budget, there are components like revenue expenditure, capital expenditure. Sir, what is the difference between these two? See, revenue expenditure, if I talk about, guys, it is the expenditure that is incurred by the government. Revenue expenditure is the expenditure incurred by the government for consumption or maintenance purpose. For consumption or maintenance purpose, guys. Getting my point? This revenue expenditure is more like a consumption expenditure. Consumption, maintenance. That means it is not a productive expenditure. When I say it is not a productive expenditure, see, generally it is said that it is not a productive expenditure, which means it is not likely to result in or to boost the economic growth. So revenue expenditure is more like a consumption or maintenance expenditure. Or maintenance expenditure. That means it is not generally a productive expenditure. It's generally, I'm telling you guys, generally it's not a productive expenditure, which means, that means it does not impact too much, you can say. It does not, you can say, create a multiplier impact on the economic growth. This we can say for sure. Does not create a multiplier impact on the economic growth. So, sir, what all components of the government, sir, come here? Please tell me. What all components of the government fall under the revenue expenditure? First, see, just like the government have given loans, government have also taken loans. Are you getting my point? Just like government have given loans, government have also taken loans. When government have taken loans, they have to pay interest payment. So these interest payment which they have to do. So isn't it more like a maintenance expenditure? Because if they default, if they don't pay interest payment, they're likely to default, which will affect their credit rating, their, you can say, their credit rating or their credibility in the world market, global world. So they have to pay the interest payment, which fall under revenue. Second, subsidies on various welfare schemes, guys. Subsidies on various welfare schemes provided by the government. Third, salaries and pensions of government employees. Salaries and pensions of government employees. Are you getting my point? So the salaries which the government provide, that fall under revenue. It's more like a consumption. Kya dena hi dena hai. See, if you want to run a government machinery, you have to provide this salary. But are you creating some capital assets? No. Clear? Apart from that, there is one more important concept here, guys. More important concept is major part of the defense expenditure. Major part of the defense expenditure. Now, when I say major part, that means their salaries, their allowances, their pension. It does not involve the acquisition of modern weaponry. It does not involve that acquisition of modern weaponry. Clear? But there is one very significant impact. Sir, I can understand that these components which you have highlighted is more like a consumption or maintenance expenditure. But one component which I'm highlighting it next, that is grants to state or UTs for creation of capital assets. Grants to state or UTs for creation of capital assets. For creation of capital assets. Sir, how can this be a consumption or maintenance expenditure? So because what I can understand from your teaching as of now, from the learnings which I have made from you, sir, these capital assets, so sir, aid in the production of goods and service. And so from the learnings, I can see that, sir, these capital asset formation, sir, is a productive expenditure. It is a productive expenditure. It is likely to impact or likely to have a multiplier impact on the economic growth. So, sir, how can you say? That is why, guys, I always say revenue expenditure generally comprises of the consumption and maintenance expenditure. There is only one component in the revenue expenditure which can result in the productive, you can say, which can be considered a productive expenditure, which can result in the creation of capital asset, which can have a multiplier impact on the economic growth. And what is that component? That component is grants to states for creation of capital assets. Grants to states for creation of capital assets. This is what we say it, one component. Apart from that, revenue expenditure is more like a consumption expenditure, maintenance expenditure, which the government have to do it to maintain its machinery, to maintain its commitment, to maintain its obligations. Clear? But otherwise, from here, the government can expect growth. They cannot expect too much of more multiplier impact, multiplier growth. No. Clear? For that, the government spends the money which fall under the capital expenditure. This capital expenditure refers to the expenditure capital expenditure refers to the expenditure incurred on the creation of capital assets. Capital expenditure, the expenditure incurred on the creation of capital assets. So capital expenditure is the expenditure that is incurred on the creation of capital assets. And that is why, guys, this expenditure is considered a productive expenditure, because it have a multiplier impact on the economic growth. It will have a multiplier impact on the economic growth. Clear? This is what the capital expenditure. So what items will come? See, whatever items like acquisition, land acquisition, construction of roads, investment in infrastructure, or even if I talk about acquisition of technology under defense. Yes or no? So that technology acquisition under defense will fall here. Whether you talk about acquisition of Rafale aircraft, or you talk about the acquisition of S-200 from the Russia, all that fall under the capital expenditure. Sorry, getting my point? This is how we differentiate the expenditure that is from the revenue account and the capital account. I hope this is clear to you. Now, once you have understood this, let me show you more trends, the budgetary trends related to the capital expenditure. See, just look at this. This graph here, it is given as the total expenditure. So you see, let me come to the effective capital later, but you see total expenditure. This is the total expenditure. Clear? This one, 14.2%. Clear? Now, sir, what is this effective capital? Let me elaborate this word effective capital for you. Effective capital expenditure says that why do we just take only the expenditure under the capital account? Why do we take just the expenditure under the capital account? Why are we taking just capital expenditure? Because basically it should be more than that. Why? Because there is one component, there is one more component that is also creating capital asset, but you have not put it in the capital account. So thereby the government has come up, Indian government has come up with a new indicator known as effective capital expenditure, which is equal to capital expenditure, which is accounted in our budget, plus grants to states for creation of capital assets. So sir, don't you think so? This should also come under the capital expenditure. But just because of accounting, it has not been. So we have come up with another term known as effective capital expenditure, which will include all the components of capital expenditure plus this component also. This component also. Here. So this one you see the effective capital expenditure. Just look at the effective capital expenditure. From 2.9 like this, you can see the effective capital expenditure has shown an increase. But what is very important point I like to highlight, in the last 5 years, can you see the revenue expenditure is declining? Can you see the revenue expenditure is declining over the last 5 years? Can you see that? Just look at this. Yes, revenue expenditure is declining. And it's a good sign because this consumption or maintenance expenditure that has to decline. That consumption or maintenance expenditure has to decline because it's more of a consumption. It is not going to give a return just like the productive or just like the capital expenditure. Clear? But if I talk about the total expenditure, suppose if I say total expenditure is 100, out of that, how much of that total expenditure is revenue? More than 80%. More than 80% of that expenditure is the revenue. So if the total expenditure is 100, 80%, around 80% has been the revenue, around 20% has been the capital. फिर भी आप निकाल के देख लेना 9.8. Now this 9.8 is, let me tell you, revenue expenditure other than this. So if I tell you total revenue expenditure including this, it will be more than 9.8. So that's why I'm saying you don't have to remember the exact number. It is more than fine that revenue expenditure is around 80% of the total expenditure. Clear? And capital expenditure is about 20% of the total expenditure. This much you can remember that. So revenue expenditure is much more, but the government is trying to reduce that. Clear? Next, look at this trend in capital expenditure. Just look at this. This is capital expenditure. This is grant and aid for creation of capital asset. This come under the revenue expenditure. But if you add both of these, we got it as the effective capital expenditure. So you can see effective capital expenditure has been consistently increasing. Effective capital expenditure has been consistently increasing over the last 10 years. In absolute terms, I'm talking about. You can see it here. And this is the capital expenditure. This is the capital expenditure. Clear? This is given as a percentage of GDP. But if I talk about effective capital expenditure as a percentage of GDP, effective capital expenditure as percentage of GDP has not been consistently increasing. तो ये ध्यान देना guys, please. If it come like that, कि percentage की पूछ रहा है या absolute पूछ रहा है over the last 10 years. चलो और बताओ. Done? ठीक है? So this is done. Now there is one more way of classifying the expenditure. Now you see, as of now, though there has not been a single question. There has not been a single question asked from this, but budget document always talk about that. I'll show you the trend also. So my point is, you should also know the another way of classifying the expenditure done by the government. Government classifies the expenditure into 6 components. First component is establishment expenditure. Establishment expenditure is nothing but simply that maintenance or that consumption expenditure. What is that? This category includes salaries, medical expenses, wages, allowances, travel expense, office expense, training, professional rent and all. This is the expenditure that is incurred for maintaining the administrative entity. This is the expenditure incurred for maintaining the administrative entity as opposed to the expenditure incurred on programs and schemes. So इसमें subsidies and all नहीं है. You look at this is more about maintenance, that is the government machinery को चलाने के लिए जो expenditure is required, that is establishment expenditure. Are you getting my point? Here we have not included that subsidies part. We have just included here, well, the government has just included only the maintenance expenditure which is required for running the government machinery. Then the second expenditure, it says central sector schemes. Now what is the central sector schemes? Central sector schemes are those schemes which are designed by the government on the subjects, mainly on the subjects in the list 1 of the 7th schedule. Central sector schemes are those schemes which are generally designed by the government on those subjects which are mentioned in list 1 of the government or list 3 also sometimes, but mainly on list 1. Clear? But can there be a central sector scheme on list 3 item? Yes. List 3 is concurrent. The very curious part or the very interesting part of the central sector scheme is it is completely funded by the central government. So there is 100% funding by the central government. And the last thing is it is likely to be implemented by the central government only. Likely to be implemented by the central government only. This is about central sector schemes. So these are schemes for which the central government provides the entire budgetary support and most of them are implemented by the central government. Clear? Then third is centrally sponsored schemes. Now, these centrally sponsored schemes are designed by the government on the subjects which could be mentioned in list 2. Just suppose health, education list 3. So health, education. So these are those schemes which are designed by the government on the subjects mentioned in the list 2 or list 3. But the other aspect of these scheme is the funding is not exclusively provided by the central government. The funding is not exclusively provided by the central government. आप logically समझ सकते हो, yes, the government is coming up with a scheme providing you the fund on your subject, an item in your, like on a subject in your list. मैं help कर रहा हूं आपके लिए, health improve करने के लिए. But don't expect that, okay, complete 100% funding will be provided by me. No. So thereby, the funding is shared between the center and the states. And the third, implementation of these schemes is mainly done by the state government. Implementation of these schemes is mainly done by the state government. Clear? So you can see for these schemes, the central government shares the budgetary support with whom? With the state or union territory. Clear? Based on a sharing pattern. Yes, the sharing pattern can differ for the different schemes and also for different states. These schemes are implemented by the state or UT government. Third is done. Fourth, there's an other central expenditure that happens on the various autonomous bodies or public sector enterprises. Then the fifth, guys, is the finance commission transfer. See, finance commission also recommend various grants. Some grants, they have to recommend it under Article 275 Clause 1, which is known as statutory grant. So some grant they have to recommend under Article 275 Clause 1, statutory grant. Clear? अगर आप देखोगे Article 280 of the Finance Commission, and in that if you look at the functions of the Finance Commission, आपको एक बात याद आएगी उसमें, you will see one thing that Finance Commission has to give or has to provide the principles. For governing the grant and aid mentioned under Article 275 Clause 1 of the Indian Constitution. So Finance Commission has to provide that on what principle the central government should give grants that should be allocated among various states. Are you getting my point? So Finance Commission has to provide for these principles. Clear? Now, the principle they have come across is the revenue deficit grant. Clear? The principle they have come into as revenue deficit grant, which says that if after devolution of money, if still the states are having revenue deficit, provide them that much of grant. Clear? So this is about the Finance Commission transfers, and the last transfer is other transfer to states, some assistance and all. This is the budgetary trend in which I just like to highlight 2 points. Actually, mainly one. This is known as your establishment expenditure. Clear? But if you look at the largest composition of expenditure of the government goes to central sector schemes, followed by other central sector expenditure. So central sector scheme constitute the highest share of the government expenditure. Okay? So this is all about another way of classification of government expenditure. Now I hope all the components of the government budget is clear. Revenue, capital, under revenue we have discussed revenue receipts, revenue expenditure. Under capital budget we have discussed capital receipts, capital expenditure. Clear? Revenue receipts में tax revenue, non-tax revenue, capital, debt creating, non-debt creating, all have been discussed in pretty detail, I would say, along with the trends. Clear? So I hope this much we have been clear with. Now starts the another part. And what is that another part? See, budget is fine. The government came up with various transactions. That okay, this will be my earnings. So government is like, okay, this will be my earnings, but my expenditure might go a bit higher. Or sometimes they might think that, okay, these are my earnings, which I'm going to get from 3 types of receipts. What are those? Tax revenue, non-tax revenue, non-debt. These are the earnings of the government. So if the government feel that their earnings of the government, that is the net earnings of the government, if it is equal to net earnings of the government, if it is equal to the expenditure incurred. Are you getting my point? If net earnings of the government is equal to expenditure incurred, that budget will be known as a balanced budget. That will be known as a balanced budget because net earnings of the government is equal to expenditure incurred. On the other hand, if the net earnings of the government, and whenever I am saying net earnings, guys, please do remember I am including only 3 receipts here. Sir, what are those 3 receipts? Please, can you dictate that again? One type of receipts is tax revenue receipts. Second type of receipts is non-tax revenue receipts. And the third type of receipt that come here is non-debt capital receipts. Sir, why have you not included, sir, debt capital receipts? Because that is not an earning of the government, guys. The government will borrow to finance its surplus expenditure, to finance that extra expenditure. Are you getting my point? The government has borrowed, government will be borrowing it to finance that extra expenditure. So the budget would be surplus. When can I say budget will be surplus? When net earnings is more than expenditure incurred. Net earnings is more than expenditure incurred. And what about the deficit budget? Deficit budget would be the budget when your net earnings is lesser than expenditure incurred. Are you getting my point? Net earnings is lesser than the expenditure incurred. This is what we call it as a deficit budget. Clear? Suppose if I ask you, just tell me from your understanding that do you think that the developing countries will generally have a deficit budget? Tell me. Do you think the developing countries will have a, generally you will find out, a deficit budget? Tell me. Yes. Why is it so that the developing countries, you will find it out, generally they have a deficit budget? I'll give you the simple reason, don't worry. Developing countries, they generally they go for a deficit budget. See, it's very, very simple aspect. If you want to develop, see, developing countries, they have a very simple goal. Developing countries, they have a very, very simple goal of rapid expansion. They have a single goal of boosting their economic growth, of becoming the developed country in the shortest possible time. So what they want to do, they want to have a rapid expansion. And when they can see a rapid expansion, this is only possible when the government incurs a higher expenditure. When the government incurs a higher expenditure, we see aggregate demand will be directly increasing. But sir, then don't you think so? Sir, but don't you think so that this will result into, sir, higher deficit and possibly, sir, economy might become macroeconomically unstable? You are right. You are right. If the government is going for a higher deficit, in that case, it can be macroeconomically unstable. So, sir, up to what extent do you think the deficit should be? Let me tell you that deficit can be good depending upon these two conditions. This deficit budget, it can be good based upon two conditions. It can be good based upon two conditions. First, what is that? First, quantity, that is from the number perspective, that is quantity, I would say, the deficit should not be more than 3% of GDP. So that is what you must have seen, that even the government is trying to reduce the deficit. I'll show you the trend, don't worry. Second, even if there is a deficit, the second is quality. Where is that extra expenditure spent? If that extra expenditure which is spent, extra means is 3%, that is a deficit. If that 3% is spent on revenue, that is a wrong practice. This 3% of GDP, that whatever be the deficit, that extra expenditure should be skewed towards capital expenditure, guys. Should be skewed towards capital expenditure. Should be skewed towards capital expenditure. So under these two conditions, I can say that okay, fine, developing countries are going for a deficit budget, but these two conditions should be met. Then only I will be able to say that okay, guys, you guys are having a good, you can say you guys are doing good. Clear? Fine, you can have this fiscal deficit, no doubt. But keeping these two conditions in mind. Clear? Now let me discuss the various types of deficit now. Let me discuss the various type of deficit. The first deficit which I should talk about is revenue deficit. The first deficit which I should talk about is revenue deficit. Now what I mean with the revenue deficit, guys? What I mean with the revenue deficit? Revenue deficit is nothing. Deficit kya hai? Deficit is expenditure is more than the earnings. That is what deficit is. Now, when I'm putting revenue word here, that means revenue deficit would be revenue expenditure minus revenue receipts. That is what you call it as revenue deficit. Simple. Yes or no? But I am not here to give you the formula. I am here to analyze that, sir, if the country is having, or if an economy is having this revenue deficit, what does that indicate? What does that indicate? See, if this is a revenue deficit, if there is a revenue deficit in an economy, it simply indicates that government is unable to finance its consumption needs. Government is unable to finance its consumption needs. Government is unable to finance its consumption needs, which means, sir, you are saying that if the government is unable to finance its consumption needs, for you, like, let me give you an example. Suppose your parents sends you 30K to 30K every month so that you can live in Old Ajandar Nagar properly. But then what happens? You might be making girlfriend also, you might be going out for movies also. So somehow your expenses for certain months increased from 30 to 35, 40K. Now, when these expenses have increased, have you made that extra expense 10K on buying books or on investment in some mutual funds, stock? No. Where have you financed that? Where have you spent that extra money? That is your consumption or maintenance needs, not any investment. Yes or no? It's not any investment. So basically what happened? Then you cannot ask from your family, from your parents. Then you cannot ask. So what you have to do? You have to borrow. And you know that when you have to borrow to spend that extra money which you have done it, to finance that extra money which you have done it, tell me from where you will be able to return back the money to your friend. Tell me now, from where you will be able to return back that money to your friend. From where? Because what is happening? You are borrowing just to meet your consumption or maintenance needs. So what is happening? If the government is incurring a revenue deficit, which means they are not able to finance its consumption needs from its own earnings. They are unable to finance. And when they are unable to finance its consumption needs from its own needs, What they have to? Government have to go for borrowing. Government have to go for borrowing. And let me tell you guys, when government goes for borrowing to finance its consumption need, don't you think so? It will reduce the borrowings, or it will reduces the resources available for capital expenditure. It will reduces the resources available for capital expenditure. Bhaiya kyun? Government can borrow only up to a limit. They are not like, okay, let's go for too much borrowing. No, you can borrow up to a limit, which is decided by the parliament. Also, from the fiscally, macroeconomically stable point of view, you can borrow up to a limit. You cannot borrow unlimited because you won't be able to repay the money. You will go default. So even from the fiscal point of view, fiscal discipline point of view, and even based on the limit set by the parliament, the government can borrow up to a limit. Clear? Now, when you have to borrow a limit and you are using partly those borrowings for whom? For meeting your revenue needs. For meeting your revenue needs. So don't you think so you will reduce the resources available for capital expenditure? Thereby, creation of capital assets will decreases. Yes or no? Or reduces the capital formation, and it will have a direct impact on the economic growth. It will have a direct impact on the economic growth. Clear? So this is what the impact of the government incurring a revenue deficit. Government should not be having a revenue deficit because we have seen that revenue expenditure is more like a consumption expenditure, and the government should be able to finance that from its own earnings. But as soon as I just finish it, I'm pretty sure आपके दिमाग में question आएगा, sir, all the revenue expenditure is not consumption expenditure. Sir, this is what you have told us some slides back. Yes or no? Sir, there is one component in the revenue expenditure for which the government can borrow. What is that? Grants to states for creation of capital assets. So I would say, yes, you guys are right. You guys are right. So thereby the government says that fine, I got your point. We will be coming up with another deficit known as effective revenue deficit. And in this effective revenue deficit, we will be excluding that expenditure. We'll be excluding the expenditure which is spent on creation of capital assets. So thereby, revenue expenditure minus grants to states for creation of capital assets minus revenue receipts, yes or no? So how much it come? Revenue expenditure minus revenue receipts come up to be revenue deficit minus grants to states for creation of capital assets. Clear? This is what we call it as effective revenue deficit. Yes, this is correct. So basically, if the government has to target or eliminate, I would say not target, elimination, the government should be targeting which indicator? They should be targeting effective revenue deficit. So government should be targeting the elimination of revenue deficit, effective revenue deficit, because for that, we cannot borrow a single penny from outside. We cannot borrow a single penny from outside because this expenditure under the effective revenue deficit is purely, completely, now I'm using the word purely, completely consumption or maintenance expenditure. No expenditure in this is related to the formation of capital asset because we have deducted that. So thereby, if you want to eliminate any deficit, it should be ERD, not RD. I hope you understood that much. Clear? Moving to the third deficit, guys, that is known as fiscal deficit. Fiscal deficit simply says that total expenditure, that is revenue plus capital minus total receipts excluding borrowing, guys. In short, total expenditure minus net earnings. This is what I have told you. Fiscal deficit equal to total expenditure minus net receipts. And this total expenditure could be revenue plus capital expenditure minus total receipts means revenue receipts plus non-debt creating capital receipts. This is called fiscal deficit. Now, if the country is incurring fiscal deficit, can it be good or bad? We discussed that perspective. But sir, if the country is incurring fiscal deficit, from where it will get the money? Sorry, बार-बार I'm country बोल रहा हूँ, but it is government, sorry. ठीक है? So if the government is incurring fiscal deficit, that means, sir, they are spending more than the earnings. Sir, this is the earnings. And sir, they're spending more than the earnings. So, sir, how the government is going to finance this extra expenditure? How? Through borrowings. Through borrowings. Clear? So, thereby, I can say one very important thing, that fiscal deficit reflects the total borrowing requirements of the government. Yes. Yes. So fiscal deficit reflects the total borrowing requirement of the government. Perfect. I hope you understood till here. Clear? Lekin government itna easy nahi. Government will come up with one more accusation. And what is that? Government is saying that, guys, my fiscal deficit is high. But why are you judging me with this fiscal deficit? So you tell me from which parameter we should judge you. You guys only tell me. So government tried to explain that, listen, in this fiscal deficit, we are taking total expenditure. Now tell me, in that total expenditure, there is one component of revenue expenditure known as interest on our loans, interest on our accumulated debt. Now tell me the interest payment which I have to give this year. Please try to understand the interest payment which I have to give this year on the loan which have been accumulated since so many past years. Is it my fault? I have to pay it only to maintain that, only not to default. Only not to default. But is it my fault? Why are you judging that? Why are you judging me based on my fiscal deficit? Because in this fiscal deficit, there is one component in the revenue expenditure, interest payment. And let me tell you guys, interest payment form the largest component in revenue expenditure. Not only in revenue expenditure, it is one of the largest component in total expenditure. So imagine, in the total expenditure, if interest payment is one of the largest component, don't you think this is not completely my responsibility? But I am doing it so that the government don't default, country don't default. But if you remove this interest payment, then you try to assess my performance, that how much I am earning, how much I am spending. Yes or no? Then you try to assess that, okay, how much I am earning, how much I am spending. But when you put it the interest payment, my expenditure automatically become this. Now, this responsibility of interest payment is not on me. This is, I'm paying it because of the debt accumulated by the previous year governments. Are you getting my point? So please judge my current year performance. Please judge my current year performance from another deficit known as primary deficit. Known as primary deficit. And what is that primary deficit, guys? Let me tell you, primary deficit says that in the total expenditure, you remove that interest payment. So in the total expenditure, because in the revenue, if you remove, so total expenditure minus interest payment. Clear? Minus total receipts excluding borrowing. Yes or no? So what it will become? This primary deficit will become total expenditure minus total receipt excluding borrowing becomes fiscal deficit minus net interest payment. Net interest payment. This is known as primary deficit. This is known as primary deficit. That is fiscal deficit minus net interest payment. And this is this primary deficit which will be utilized to measure the performance of the government, measure the current year performance of the government. Measure the current year performance of the government. Measure the current year performance of the government. Clear? So these are various type of deficit. There is one more deficit which is known as budget deficit. Budget deficit. Yes, there is a space there, so I'll write it there. Budget deficit. Budget deficit, guys, which simply it says budget deficit is total expenditure minus total receipts. That's it. So what about borrowings? Total receipt when I have written here, which means including borrowings too. Including borrowings too. So, sir, you are saying that budget deficit means total expenditure minus total receipts, including borrowing. तो सर फिर डेफिसिट होगा कहां? फिर तो जीरो होगा ना. यस, बजट डेफिसिट विल बी जीरो देन. Ideally it will be zero. Ideally it will be zero. That the total expenditure government has thought, okay, I will be spending this much of money. Let us say 1 rupee. And then total receipts, I'll be getting total receipts of 1 rupee through this manner. 78 or 79 paisa from earnings, 21 or 22 paisa from borrowings. It says include all. So thereby 1 rupee coming into the government, 1 rupee going out. So budget deficit will be zero. I hope you understood these different types of deficit. Just look at. This is the graph from where rupee comes from. Rupee comes from. So from which sources rupee comes from? This is where rupee goes to. Rupee goes to which sources? Rupee comes from and rupee goes to which sources, like that. So you look at, I told you in the rupee comes from, look at these first of all. These part till here is the earnings of the government. This known as earnings of the government, which can be divided into 3 type of receipts which we have understood. One is tax revenue, second non-tax revenue, third non-debt capital receipt. Look at the tax revenue. Corporation tax, income tax, custom, union, GST and other services. These are the tax revenue. So I told you, you see, tax revenue comprises more than 50-60% of the total earnings of the government, followed by non-tax, followed by non-debt. Yes or no? So these 3 are earning. What is the largest source? Income tax. Income tax is going to be the largest source of revenue for the government or largest source of earning for the government. Done? Then what about this, sir? Borrowings. If you take these receipts, don't you think so it will complete 1 rupee? And if the government gets 1 rupee, it will spend 1 rupee. So that's why budget deficit is 0. 1 rupee earning, 1 rupee spending. Budget deficit is 0. Sir, but what about fiscal deficit? Fiscal deficit will be 1 rupee spending minus 76 paisa spending. So 24 paisa is the budget deficit. 24 paisa is the budget deficit. And I told you fiscal deficit reflects what? The borrowing requirement of the government. Again, I'm saying fiscal deficit reflects what? The borrowing requirement of the government. Clear? Any doubt in that? Now, this is how the government spend the money. I told you one of the largest component of expenditure is interest payment. Please don't look at this. This is not the expenditure. This is not the expenditure. This is the money going out, but this is not the expenditure of the government. Have I mentioned any time? So tell me, have I mentioned here? This is the state share already of taxes and the duties which are collected by the government. Okay, if you know the Finance Commission properly, so you would be realizing that what does this state share of taxes and duties mean? I am not going to cover here. Clear? But for the mains, fine, I might take it in the economy, but actually you should be knowing it. That concept of tax devolution, that okay, the center has to devolve this much of taxes to the state government. Yes or no? So this state's share of tax and duties, that is the state's share. It is not the expenditure that is incurred by the government. Clear? So it is not going to come in any account. Any account. So that's why I know to tell you, finance interest payment is the largest expenditure. Establishment, central sector scheme, just look at this. Yes or no? Then you see, then there are other expenditure, defense, centrally sponsored, other expenditure we have also seen. Clear? Like that. Look at the deficit trend. I told you deficit is not a good thing. That's why you see government is trying to reduce deficit. Government is trying to reduce deficit, and in this year you see the government has targeted the fiscal deficit of 4.4% of GDP. But still a lot more to go. It should come under 3%. It should come under 3%. So sir, if I talk about the trend, look at the trend. Fiscal deficit greater than revenue deficit, greater than primary deficit, if I'm right, and greater than effective revenue deficit. This is the trend. If you include budget deficit is likely to be 0. Clear? You can see here, fiscal deficit is number 1. There is no need to remember the facts as such. Trend is important. Fiscal deficit number 1, followed by the revenue deficit, you can see, followed by the primary deficit, you can see, and then followed by the effective revenue deficit. Clear? So that was all about the types of deficit. Now, when deficit is there, obviously you need to finance that deficit. Yes or no? When deficit is there, so obviously you need to finance that deficit. So that financing of fiscal deficit, is known as deficit financing. Financing of fiscal deficit is known as deficit financing. Clear? Please do remember this. Financing of fiscal deficit is known as deficit financing. Clear? Now, what are the sources of financing the debt? The sources of financing the debt, guys, it could be internal. There are internal sources or external sources. See, ultimately, the government has to, there are internal sources or the external sources. Internal sources or external sources could be the government can get some grants from somewhere else, grants or aid or assistance. Aid or assistance. Yes or no? So the government can give you, the government can finance its deficit through grants, external grants. But koi dega kya? No, yaar. But one of the source of financing the deficit is grants. That other country or the multilateral development banks can provide the grants to the Indian government. And grants means you don't have to repay it back. Or aid or assistance. When I say aid or assistance, this is more like a soft loan. Soft loan. That means the conditions are soft. And what conditions are soft? Interest rate is very, very low and the maturity period is high. That is known as soft loan. Interest rate in under these external assistance or external aid, it is very low and the maturity period is high. But very important distinguishing point from the grant is grants do not have to be repaid back by the government. But this external aid or assistance have to be repaid back. Then third, external borrowing. This is means at the commercial rate. External borrowing at the commercial rate. At the commercial rates. Okay? Or if I talk about the internal sources, it could be borrowing. Now this borrowing can be done by the government from the banks or financial institutions, from RBI from the public? Yes or no? So borrowing can be done. Or there is another way known as printing of new money. There is another way known as printing of new money. So if the government asks the RBI, to print new money for financing the fiscal deficit, it is known as monetized deficit. Are you getting my point? If the government asks the RBI to print the money for financing the fiscal deficit, which means it is known as monetized deficit. But such practice have been stopped. Such practice have been stopped in 1997. The simple reason is because this inject more liquidity in an economy and thereby monetized deficit results into higher inflation. Thereby monetized deficit results in higher and higher inflation because you are printing the money to finance this deficit. Getting my point? Clear? So these are some sources of financing the deficit. The thing is, this practice might be, again I'm telling you, this practice might be working in other countries, but it has been stopped. It has been stopped in our country after 1990 or since 1997. Clear? Let me show you this trend of financing the fiscal deficit. You will realize that majorly our deficit financing has been through the borrowings, and mainly those borrowings has been internal borrowing. So our government is mainly financing this fiscal deficit from where? From the internal sources. And even in the internal sources, which one? Market borrowing. Getting my point? Again, I'm reiterating this fact that mainly our government is financing from the internal sources, and even in this internal sources, it is the market borrowing that forms the largest component. Then it is followed by securities against small savings. I'll talk about that. Don't worry, small saving schemes. Clear? So you can see debt receipts, market borrowing form the largest component. Short-term borrowing, clear? From the banks, financial institutions like that. Securities against small savings schemes. State provident fund, basically public account liabilities. These are public account liabilities. Clear? Public account liabilities. Then this is external debt. So you see external debt is how much? Very lower as compared to our internal debt. Clear? So this is about the sources of deficit financing. I hope that you might have understood the chapter till here. Clear? There is a small portion left, but it is also, I would say, it also requires a great concentration again from your side. So what I want you here is to pause the video for some time. To pause the video, clear? And try to again just revise the concepts before you move to the next part. Clear? Before you move to the next part. And by that time, I'll also take a water or tea to just, I would say, for a small short break. So guys, now let us move into the next concept, that is fiscal consolidation. See, we understood clearly the reason. If I summarize this, we understood clearly the reason that developing countries generally incur a fiscal deficit. Clear? Now, why they incur a fiscal deficit? For rapid expansion. Rapid expansion. Now, for this rapid expansion, guys, they incur a fiscal deficit, and then to finance this fiscal deficit, the most predominant source to finance this fiscal deficit is borrowing. And this borrowing, if I talk about it, is internal borrowing. Now, when you borrow more and more, what will happen? This results into result into high debt on the government, high debt or liability on the government? Yes or no? High debt or liability on the government? Is there any doubt? Now, when there's a high debt or liability on the government, don't you think this will result in high interest payment, which the government have to pay? And when the interest payment increases, remember, the revenue expenditure will increase, thereby resulting into high fiscal deficit. So what happens when the fiscal deficit is high? It results into high borrowing, resulting into high accumulated debt, that is the debt, leading to high interest payment, and basically it creates a kind of vicious cycle. So basically it creates a kind of vicious cycle. Clear? Now this vicious cycle should be broken. And how this vicious cycle can be broken? One of the way to break this vicious cycle is known as fiscal consolidation. And what is that fiscal consolidation? That fiscal consolidation means simply reducing the fiscal deficit. Fiscal consolidation refers to the reduction of fiscal deficit. Are you getting my point? Fiscal consolidation simply refers to reduction of fiscal deficit. And how this fiscal deficit can be reduced? There are two broad strategies through which you can reduce the fiscal deficit. Strategy number one, either you mobilize the revenue, that is mobilization of revenue, mobilization of revenue. So basically you increase more and more revenue. Am I right? Mobilization, like mobilize more and more revenue. Clear? Second is reduction of expenditure, that you reduce the expenditure. So all the steps undertaken by the government either towards mobilizing more revenue or reducing the expenditure will fall under the fiscal deficit reduction, or I can say it will fall under the fiscal consolidation. It will take the government towards a path that is known as fiscal consolidation path. Getting my point? So again, just highlighting mobilization of revenue, which can be done through various tax reforms which can be undertaken by the government, or broadening the tax base. You broaden the tax base, improve the tax base, or improve the tax administration. Like that, overall the point is that somehow you try to generate more revenue. Like if I tell you, the government some years back, they introduced a tax known as tax on the income from virtual digital assets. Tax on the income from virtual digital assets. So जो आप जो क्रिप्टो करेंसी में जो पैसे बनाओगे उस पे गवर्नमेंट ने टैक्स लगाया. So what government did? It improved the tax base. When it increased the tax base, the government is likely to get more higher income, and that is how the government can increase its revenue. One way. Second way, yes, government can improve its revenue by higher and higher GDP. When GDP increases, the economic growth increases. That is also another way. It will also result into higher revenue. The second strategies to reduce fiscal deficit is reduction of expenditure. Reduction, that is somehow you reduce the expenditure. One of the way is rationalization of subsidies. Now, when I say rationalization of subsidies, it does not mean at all to reduce the subsidies. It means better targeting, reducing the leakages that were happening in the subsidies. So when you reduce that leakages, when you improve the targeting, it is likely to reduce the expenditure. Clear? And when you reduce the expenditure, increase the revenue, don't you think fiscal deficit will be controlled? Yes. So has the government not moved towards this path of fiscal consolidation? Or has the government not taken any step towards this fiscal consolidation? let me tell you, this journey towards fiscal consolidation has been there since so many years. Since so many years, government have taken various steps towards institutionalizing or towards this fiscal consolidation. What steps have been taken? Let me tell you guys in the timeline format. Let me tell you guys in the timeline format. It actually started, the first step was taken in 1997. It was stopping the practice of monetized deficit. Stopping the practice of monetized deficit. So what used to happen earlier, that is before 1997, that government was like government, you see, at that time we did not have much resources within the country itself. So we cannot borrow from within the country to finance the deficit. Second, obviously when our economy was majorly a closed economy, not strictly, majorly a closed economy, so nobody is going to like give us the loan also from outside. So thereby what should we do? So government thought of a way by asking the RBI to print the money in case of financing the fiscal deficit. To print the money for financing the fiscal deficit. That's simple. RBI was like, okay, I am owned by you only. Government have 100% stake on the RBI. So thereby what happened? RBI did what the government used to ask them. Now, when government knows, try to understand, when government knows that I have one tool, so whenever I face an issue of financing the fiscal deficit, I simply have to dial a call to RBI and say, hey, listen, please give me or please print the money of this much amount. Done. My fiscal deficit problem got solved. But while the problem gets solved, but it has two negative repercussions. Definitely one repercussion was that you are injecting new money in an economy. When you print money and inject new money in an economy, what happens? It increases the liquidity and it definitely leads to higher inflation. No doubt about that. But the second problem is it hampered the fiscal performance of the government. Why it hampered the fiscal performance? Because government is like, hey, listen, whenever they were not much concerned then about the fiscal consolidation path. They are like, hey, listen, fine, if our expenditure is high, we don't have to do anything. We have to simply call on the RBI and ask for more currency. So basically, don't you think the government will not be taking steps to reduce fiscal deficit? Yes, it made them lenient. So that's why the first step I say that was taken towards this progress or towards this path of fiscal consolidation by stopping this practice of monetized deficit. Clear? But the significant step I would say towards this fiscal consolidation was taken in 2003 when the legislature or when the government enacted FRBM Act. Fiscal Responsibility and Budget Management Act. This was the act which clearly institutionalized. This was the act that institutionalized the fiscal consolidation. Or you can say the idea of fiscal discipline or fiscal prudence. Why I'm telling you all these words are same, even if it is asked in the exam, you should be able to, I would say, answer it properly. So FRBM Act, if I talk about, this was the major step taken towards institutionalizing the fiscal discipline or fiscal consolidation. FRBM Act have some major provisions. Now, in that major provisions, although it is given in the Pulse books, clear? But still, let me tell you certain major provisions of the FRBM Act, if I talk about, clear? See, if I talk about the major provision of the FRBM Act, one major is about the targets. This FRBM Act clearly defined the targets of different deficit for the central government. It clearly highlighted that the fiscal deficit should come under 3% by 2008-9. Not just only it has given for a 5-year period, but it also provided for an annual reduction of fiscal deficit, that how much fiscal deficit should be reduced on an annual basis so that it can achieve the target of 3% by 2008-9. Second target that it has put was with respect to revenue deficit. It asked for complete elimination of revenue deficit. Why? Because revenue deficit has been mainly a consumption or maintenance expenditure. So first major thing with respect to the FRBM Act, what about targets? Now with respect to the targets, sir, these targets were set. Sir, was it set only for the central government or for the state government? Let me tell you, FRBM Act was enacted for the central government. But along the lines of FRBM Act, state government have their own fiscal responsibility legislation. Along the lines of, again I'm telling you, along the lines of central government, state government have enacted their own fiscal responsibility legislation. So this was one provision. Second, this act institutionalized the banning of monetized deficit. Although 1997 this monetized deficit was stopped, but this act clearly said that the central government shall not borrow from RBI except by ways and advances. So it clearly says the act basically bans the primary issuance of government securities to the RBI. So it is like, hey, listen, you cannot sell the primary issuance, the government, that ad hoc bills to the RBI. If you want to borrow from the RBI, it can only be borrowed through WMA, ways and means advances. And third is ask the government to lay down various statements, along with annual financial statements. So it asks for 3 major statements that has to be laid down along the annual financial statement. What are those 3 statements? First, fiscal policy strategy statement, medium-term fiscal policy statement, Third is macroeconomic framework statement. So these 3 statements also have to be laid down along with the annual financial statement. Clear? So like this, FRBM Act was enacted. Now let me tell you the performance with respect to the fiscal deficit of central and the state government. They were very nice after the enactment of these acts. The fiscal deficit of both the central and the state government were decreasing. They were reducing until 2008 kicks in. So until 2008 kicks in, by that time the performance basically of the government were very nice. They were reducing. The fiscal deficit was reducing. So FRBM was successful to a certain extent. But in 2008, what happened? Global recession hit. And tell me, as a secretary to the Minister of Finance, if you want to prevent India from entering into an economic recession, how will you do it? What type of fiscal policy you will undertake? You will undertake expansionary fiscal policy. Yes, very good. So thereby, to prevent India from entering into this recession, government took expansionary fiscal policy. Yes or no? Now, when the expansionary fiscal policy, it resulted into higher expenditure. Perfectly fine. So it clearly resulted into higher expenditure. And that resulted again the fiscal deficit going above the roof. So again that led to the higher fiscal deficit. So what happened? The government thought that okay, our financial performance has been deteriorating. So what we can do? We can come up with another amendment to the FRBM Act. And that amendment to the FRBM Act was referred as FRBM 2.0. That amendment to the FRBM Act was known as FRBM 2.0. In this FRBM 2.0, two major amendments happened. Two major amendments. First, the concept of effective revenue deficit was introduced. तभी तो FRBM 2003 ने ये नहीं बोला complete elimination of ERD, because by that time ERD was not there. Clear? This concept of ERD, effective revenue deficit, was introduced under the FRBM 2.0. Second, FRBM 2.0 says that while you guys lay down 3 statements along with annual financial statement, my suggestion is you have to lay down one more statement. There is a 4th statement which you should lay down along with annual financial statement. And what is that? Medium term expenditure, medium term expenditure framework statement. ठीक है? Medium term expenditure framework statement that you should be laying down, clear, along with the annual financial statement. So again, and third thing again, revise the targets. Revise the targets. Revise the year target year for reducing the fiscal deficit to 3%. Now complete elimination of ERD, not revenue deficit, ERD. So again, the central government starts reducing ERD very nicely. Now in 2016, government constituted one committee known as N.K. Singh Committee. N.K. Singh Committee, which is also known as FRBM Review Committee. FRBM Review Committee, it was set up to assess the performance of FRBM Act. That to what extent FRBM has been successful in ensuring that government adheres to this fiscal consolidation path. Clear? So the recommendations of the N.K. Singh Committee, guys, you can read it from the Pulse handwritten books only. I would say it is no more relevant right now. Clear? Because it was pre-COVID. So thereby it has been no more as such relevant, but still I would say that you read it. Now what happened? This was going on. The government was reducing the fiscal deficit. It was in a path towards fiscal consolidation that suddenly in 2020, what happened? COVID came into picture. COVID. And with the COVID, what happened? The aggregate demand started to fall down. Now, if you want to boost economic growth, how can you do that? If you want to boost economic growth, government undertook expansionary fiscal policy. And when government undertook expansionary fiscal policy, it resulted in higher expenditure. Ultimately, you deviated from your path of fiscal deficit. Let me show you the trend of fiscal deficit. Look at this. Just look at this. You try to relate to that. Even before that, it was a bit higher. So let me tell you. So before this also, 2016-17, it was a bit higher. So around, I would say 2012, the fiscal deficit was something around 5%, I think, above than 4%. So you see, it was moving towards path of fiscal consolidation that suddenly we started feeling the impact of COVID in the last quarter, and thereby to prevent from its impact, we increased the expenditure, resulting into higher fiscal deficit. But then you see this lockdown continued to almost how many months? 2 months. So thereby you see this was the year how the fiscal deficit has been too much. Look at this. Fiscal deficit has been too much. Why? Because the government undertook the responsibility of boosting the economic growth, of ensuring that economic recovery is fast. Clear? And then again now India is towards the path of fiscal consolidation. You can see that. Clear? So this is what about fiscal consolidation I would say the evolution, how these fiscal consolidation path is, like what are the steps that have been taken towards this path of fiscal consolidation. Clear? But whatever it be, yes, we are trying our best to reduce our fiscal deficit, but to finance that fiscal deficit, whatever fiscal deficit we have, to finance that fiscal deficit, what government have to do? Government have to borrow. Government have to borrow. And that results in increasing the liabilities of the government. Are you understand? What government have to do? Government have to borrow. And that resulted in incurring the liabilities. That resulted in the liabilities. And these liabilities, I can explain to you, or these liabilities can be categorized into three types. There are three categories of liabilities, starting with first, public debt. Second, public account liabilities. Third is off budget borrowing, which is also known as, guys, also known as extra budgetary resources, which is also known as extra budgetary resources. Clear? So basically, the government liabilities can be divided into these three categories. First, it is public debt. Clear? First, it is public debt. Now, what I mean with the public debt, guys, public debt is the debt. Public debt is the debt which is contracted against the CFI, that's a debt which is contracted against the security of CFI. Clear? So basically, you see the government which undertake borrowing either from internal sources or external sources, it takes that loan as a security, like it takes a loan against the security of CFI. Clear? That is known as public debt. It's a debt contracted against CFI. It is actually the debt under Article 282 of the Constitution. Just let me confirm this article itself. Sorry, 292. Under Article 292 of the Constitution. ठीक है, मुझे पता होता है कि कब मेरी गलती है. So 292. Now the government, we have discussed that government can borrow it either from, the government can borrow it either from, no, like not like this. The government can borrow it either from internal sources or the government can borrow it from the external sources. Clear? We have discussed internal borrowing means borrowing from the sources which are present within the country. And external borrowing means borrowing from outside, that is outside the country, which could be foreign countries. You can borrow it from the countries. You can borrow it from the international organizations like IMF or World Bank. You can borrow it from multilateral development banks like New Development Bank, Asian Infrastructure Bank, Asia Development Bank, like that you can borrow it from there. Clear? And then even in the internal debt, it can be further subclassified into marketable debt and non-marketable debt. Marketable debt and non-marketable debt. Now, what is that marketable debt? Marketable debt refers to the debt which can be traded in the market. Clear? Which can be traded in the market. So the government securities which have been issued on auctions, treasury bills which have been issued on auction, all those form part of the marketable debt. Again, I'm telling you, marketable debt. Marketable debt, again, I'm telling you guys, this debt, marketable debt is the debt which can be traded in the market. Like the government security, जैसे आपके stocks हैं, आपने stocks buy किए, मन नहीं किया 3 दिन बाद sell कर दिया ना, so those securities are tradable. Those are called marketable shares of the company because that can be traded in the stock market. In the same way, the government securities government securities, when it is marketed, it is known as marketable debt and non-marketable debt. Clear? This is known about the public debt. Now, if I tell you the public debt, let me tell you almost 90% of the liabilities of the government, almost 90% of the liabilities of the government has been the public debt. 90% of the total liabilities. So public debt constitutes 90% of the total liabilities of the government. Public debt. Now, even in this public debt, sir, which one is more? So basically, sir, the government borrows mainly from the internal or the external? Let me tell you guys, internal debt is much more than the external debt. If I give you the figure, out of the total government debt, internal debt constitute almost 95% and external debt constitutes almost 5%. What does that indicate? That external debt constitutes a very low proportion of the government borrowing. और वो हमने उधर भी देखा था डेफिसिट फाइनेंसिंग में द गवर्नमेंट डोंट बोरो मच. अगर नहीं बोरो करेगा तो ओवर द इयर्स उसका डेट भी तो कम होगा, तो कंट्रीब्यूशन टू द टोटल डेट वो भी तो कम होगा. एंड इफ द एक्सटर्नल डेट इज लो, वी कैन से वन थिंग अबाउट इंडियन डेट, that is India's public debt is characterized by, this line you can even write it down, it is characterized by low currency and interest rate, low currency risk and interest rate risk. Are you getting my point? It is said that it is characterized by low currency risk and interest rate risk. Clear? Why? Because when the external debt is less, so that means even if the currency changes, $1 equal to 80, $1 equal to 85, it doesn't affect much to the India's public debt. Plus, even from the external debt, it is mainly from the official sources. Official sources like organizations, countries, not from the international capital market. It is mainly from the official sources. So that's why it makes India's debt profile a relatively stable debt profile. And lastly, most of the debt in India is almost at a fixed interest rate. और अगर fixed interest rate पे है तो interest rate risk क्या हो गया? Low हो गया. Clear? Because most of the debt it is at a fixed rate. Now, even in the internal debt, marketable debt constitutes more than non-marketable debt. Please do remember that also. Marketable debt is more than non-marketable debt. Clear? So, I think this is all about the public debt which I want to highlight. Then there is a second kind of liabilities of the government which we call it as public account liabilities. Now what happened, it is like you can say that government don't borrow directly from you, but government come up with schemes like Kisan Vikas Patra, Sukanya Samriddhi Scheme, Mahila Samman Saving Certificate, Postal Deposit. In short, government come up with, you can say, some small saving schemes. When government come up with these small saving schemes, what happened? Government is not borrowing you directly, but they are asking you to invest in those schemes, and those schemes money goes to whom? To the government. Yes or no? So in short, don't you think is it also the part of the government liabilities? Yes, because it has to be repaid back. Liability is something which has to be repaid back. So public account liability refers to the liabilities on the public account. Public account liabilities refers to liabilities on the public account. Getting my point? So public account liabilities refers to liabilities on the public account. And on the public account, what happened? This आपको तो पता ही है, government के 3 funds, Consolidated Fund of India, Contingency Fund of India, and Public Account of India. Public Account of India consists of the public money. Public Account of India consists of the public money. Clear? Public money means like the money from the small saving schemes. The money from the small saving schemes. Clear? So this is what about the public account money, that is the money from the small saving schemes or provident funds, state provident fund, state provident fund. Clear? State provident fund. So this is the liabilities on the public account. If I compare the total liabilities, public debt comprises almost 90%. Public account liabilities comprises almost 10%. So it is almost around 0 to 0.5% liabilities goes to the off-budget borrowing or the extra budgetary resources. Clear? Off-budget borrowing or the extra budgetary resources. If I compare these three, public debt is more than public account liabilities and public account liabilities is more than off-budget borrowings. लेकिन अब लास्ट बात ये तो रह गई कि सर ऑफ बजट बोरोइंग क्या होता है, एक्स्ट्रा बजटरी रिसोर्सेज क्या होता है. सो व्हाट डू यू मीन बाय ऑफ बजट बोरोइंग्स? सो लेट मी इलैबोरेट दिस ऑफ बजट बोरोइंग्स और एक्स्ट्रा budgetary resources. What I mean with that? EBRs, extra budgetary resources. ठीक है? Let us try to understand. So if you see, this is a central government. Central government earns the money, receipts, and spends the money, expenditure. Clear? This difference of expenditure over the earnings is known as fiscal deficit. Now you see the government has promised that okay, I'll provide you the subsidized food, subsidized rice, wheat, coarse cereals at the price of ₹3/2/1 per kg for rice, wheat and coarse cereals. Now for that procurement will be done by whom? That procurement will be done by another agency known as, suppose, Food Corporation of India. So the central government has asked the FCI that, hey, listen FCI, you please procure 100 kg of, try to understand. You please procure 100 kg of rice from the farmers at which price? MSP. So what is the cost price to the farmer? Sorry, cost price to the FCI is MSP. Plus other incidental cost, labor charges and storage cost, distribution cost and other thing. So then FCI fine, it says that okay, I have procured from the farmers at MSP plus other incidentals. Then the government says to the FCI, now you have to distribute this to the people at subsidized rates. You have to distribute this to the people at subsidized rates. Subsidized rates. So FCI is like, hey, listen, first of all, I have procured from the farmers at a price which is already higher than market price. That is MSP, generally higher than market price. And then you are asking me to give it to the people or to give it to the state government at a price which is very subsidized. Now, when this is the selling price, the loss, there will be loss because cost price is more. Yes or no? Who is going to bear this loss? Hey, listen, FCI clearly says to the government, hey, listen, I don't have any money. So government is like, hey, don't worry. I have promised to the people, this is not loss. This is called the food subsidy, which I will be providing to you. Which I'll be providing to you. So FCI is so naive. They are like, okay, chalo, let's implement the government policy. Procuring from the farmers, distributing it. Then FCI simply dials a number to the government and asks, hey, listen, this is the loss and you have to give it to me. Like suppose 500 CR. Government says, there has come a problem. There was a problem. And what is that problem? So government clearly says the problem is very simple. I have overspent the money on certain other purposes. And I can't take more money outside, because if I spend more, then the estimates, my fiscal deficit will go higher. When my fiscal deficit will go higher, what the market will say? That, oh, government, we cannot rely on this government. This government is not credible government. The government overspends the money. They are not able to accurately predict how much fiscal deficit there will be. So thereby the credibility of the government will be shattered. So government says to the FCI, listen, I cannot give you 500 CR. FCI was like burning with anger. What have you done to me? I have procured it from the farmers, distributed almost 500 CR has to be given. How can I arrange for it? Government simply gave a solution that why not you borrow a loan, you borrow 500 CR from the market. Why not you borrow 500 CR from the market? FCI says to the government, are you crazy or what? I'm already boiling with anger and you are asking me to take loan for which I have to give interest. Why should I increase my liability? This is your job. You have to give it. You have to give it 500 CR from your budgetary expense, from your CFI. How can you ask me to take the loan? Government first of all gave him the cold water. That first of all, cool your mind, cool your head. And what government asked the FCI, that listen, you simply do it for the people. It is me only who is going to repay. It is me only who is going to repay. But I am not going to repay it now. I'll be repaying it after 5 years, 6 years, 7 years. Because at that time, some cushion will be created in my balance sheet and I will be able to return back the loan. So you don't worry. This liabilities will be paid by me. FCI asked, fine, agreed. Then what about the interest? Don't worry, that interest will be paid by us also. Clear? So you see what has happened. Try to understand. Central government has been able to reduce its expenditure by asking the FCI or the other corporations to borrow on behalf of the government. So these government organizations have been told to borrow. Are you getting my point? Indirectly, don't you think this is the expenditure that should have been incurred at that point of time? And if that would have been incurred at that point of time, fiscal deficit would have gone upwards? Yes or no? So don't you think you are hiding the true fiscal deficit? Yes. This is what extra budgetary resources. Off-budget borrowing, that the off-budget borrowing is being done by whom? By the organizations which are under the control of the government, but not directly by the government. Clear? And these resources, for this resources, principal and repayment has to be provided by the government only, including the interest. The only purpose of extra budgetary resources to not go the fiscal deficit above than the desired one. Clear? So I hope you understood this 3 type of liabilities. So now I think that everything has been covered. Clear? Extra budgetary resources. Key trends also I have highlighted. One very important point is given in the book, that is composition of public debt. Yes, we know that in the internal, please try to understand, we know that in the internal, marketable debt is more than non-marketable. Perfectly fine. But in the internal, there are multiple sources. There is commercial bank, there is RBI, there is mutual fund, there is insurance company, all those. What is the, you can say, trend? Who invests higher or who gives loan higher to the government? It is commercial banks, followed by insurance company, followed by RBI, followed by provident fund, followed by mutual funds. Clear? Then borrowing power of center and states, guys. This is polity topic, so you can read it by yourself. Ways, means, advances, small saving schemes. I want you guys to read it by yourself. They are nothing. It's simply informational based. Now, Why we'll be stopping it here? Because it completes all our conceptual understanding about the fiscal policy.